Hello everyone, welcome to ZaranTech. In today's digital age, managing assets efficiently is vital for businesses to thrive. With SAP's New Asset Accounting, organizations can streamline asset management processes and gain valuable insights. Let's dive into one of the fundamental aspects of SAP, New Asset Accounting. New Asset Accounting in SAP revolutionizes how businesses manage their assets, offering enhanced functionalities and greater flexibility. It's a crucial module for organizations looking to streamline their financial processes and improve reporting accuracy. Implementing SAP's New Asset Accounting can lead to up to a 30% reduction in errors related to assets. This results in cost savings and better compliance. Asset accounting is crucial for financial management, enabling accurate tracking of investments, optimizing asset usage, and making informed growth decisions. In this course, we'll cover SAP's New Asset Accounting comprehensively. From setting up asset data to depreciation postings, it's all here. Whether you're a beginner or want to advance your skills, this course will confidently equip you to navigate SAP's Asset Accounting module. But before we begin, please subscribe to our YouTube channel and hit the bell icon to receive regular updates from us. Now let us take a look at the agenda. Agenda 1. Overview of Asset Accounting. 2. Configuring basic new asset accounting. 3. Configuring fixed asset accounting. 4. Defining depreciation areas. 5. Depreciation and calculation methods. 6. Determining depreciation areas in asset. Let's dive in.
We'll talk about new asset accounting, the overview today. So this is a brand new thing which came into market, the new asset accounting. It came up with EHP 7 enhancement pack 7 for with ECC 6. Recently, the latest update in the new asset accounting area actually. So we'll give you the overview of new asset accounting. But before we get into new asset accounting, let's understand at a high level what is asset accounting. For those who are very new to this area, let's understand what is asset accounting as an overall solution. Asset life cycle. So we'll talk about asset life cycle first as a business process before getting into system. So asset life cycle is something in the organization we use the asset as from acquire to retire. So what happens is, let's understand what is asset first. So asset is something which you purchase as a capital item, as a balance sheet item in the books, and you use it for a long time. It's not something you use it today and it gets over. It's not an expense. That's an expense actually which you use and gets over. Asset is something you keep it for a long. Building, you keep it for so many years. Machinery, you keep it for multiple years. Vehicles, you keep it at least for 5-7 years. So all those are assets. These are part of balance sheet of your books, and you use them continuously. And during the life of the asset, let's say you are using a vehicle, you are using it for 5 years, you depreciate that asset. Depreciation is something the reduction in the value of the asset due to normal wear and tear. When I say normal wear and tear, it means you give a depreciate. Let's say you assume that every year my vehicle will reduce by 20%. So next 5 years, my vehicle value will be zero actually. So at that point, I can retire my asset, my vehicle. So let's talk about asset life cycle. So number one step is the create asset record. So when in SAP you have asset life cycle, you create the first step is when you acquire the asset, when you plan to acquire the asset, you first create the asset record, the master record. With that record, you get the number generated in SAP, and that number falls under certain class, under certain criteria. For example, it can be under buildings, it can be under vehicles, it can be under machinery, which justifies what type of asset it is. Then once you create an asset number, then you acquire an asset. You can acquire through normal acquisition happens through the purchase order. Of course, not land and you purchase building through purchase order, but let's say you are purchasing a machinery. You create a purchase order, and when the invoice gets booked, your asset gets debited and your vendor gets credited. And when you make the payment to the vendor, your vendor is paid off. Finally, you have the cost of the asset in your books, in your balance sheet. Then you start using it Let's say you determine the life, you purchase the vehicle, you determine the life, let's say 5 years, you start using it from today, and you say, okay, in 2016, the value is 100,000, and it should be zero out by 2021 in next 5 years. So every year there should be a depreciation of 20,000. So during the life of the asset, you do normal, regular activities. You can change the asset master record, you can change the number, you can change the category, you can transfer the asset from one company code to another company within your entity, one location to another location. You play around for next 5 years. Or of course, you depreciate, you maintain, do the maintenance, you spend money on the maintenance of the asset, you do your insurance, you do all those different transactions on the assets. And depreciation is something which is a planned depreciation during the course of the asset. And once at the end you determine, okay, now my asset is complete, it's 5 years, now you have option of selling, of scrapping it. Now in scrap you have two options. First is you sell it with some value, that's a sale. You sell it to some customer, that's a sale. Another is scrap. You scrap it with a zero value. Normally it doesn't happen if you are selling an asset, let's say even a vehicle or a car after 5 years, you are not going to sell it for a zero value. You are going to sell it for at least for some number. So that's normally a sale. Scrap is something zero value, then it's known as scrap. And once the asset is scrap, it is out from your books. You retire the asset, the cost gets zero, you book the gain on loss, and you have to a P&L, and your asset is going out from the system. So at a high level, that's an end-to-end asset life cycle from acquire to retire, and that's how the flow goes on. Now let's talk about asset accounting as a SAP solution. So asset accounting is a subsidiary ledger of financial accounting. The appropriate GL accounts are updated each time we post. Asset accounting is a subsidiary ledger or a sub-ledger, you'd normally say. It's connected to the GL account behind the scenes, and when you do some activity on the asset sub-ledger, automatically the GL gets updated. So you have asset master record, you purchase a value of 1,000, and at the same time the GL gets updated for the 1,000. So when you report your balance sheet, you have the value in, you don't report it by asset, you report it by GL. So you see you have 1,000 being visible in the books when you report to the authority. So it's a high level business process. So we have org structure, we have master data, we manage assets. I'm just talking about the asset accounting, so we have overall business processes. Then we process asset activities. We just talked about depreciation, transfer, change, retirement. Then we perform the month-end close. The depreciation is a monthly activity. And then we do the reporting, analyze the reports and the results. Integration of asset accounting in SAP. Asset accounting is closely integrated with other areas also. It's not something, it's a isolated thing. It's an integrated module. It transfers data from directly to and from other system as a result of integration. Cost can be booked directly to an asset from MM, AA, and PM. So MM is material management. We just talked about. You book a purchase order, and the cost will flow to an asset. You direct asset accounting. You can post. PM is a plant maintenance. So you have your equipment created in an asset, and when you post the maintenance cost on the equipment, it gets posted to the asset. Cost can be booked to an AUC and then settled to an asset. So you can also book an AUC. AUC is under construction. So for example, building is, it takes 2 years to build a building, for example. So in building, until it is completed and put to use, it will be AUC, asset under construction. Or in business world, we say it's CWIP, capital work in progress. And depreciation cost can be planned and then posted to GL. So based on the depreciation calculation, it will show you the planned depreciation, and then every month it will post the depreciation. So this module is closely integrated with other areas as well. We'll talk about this in a few minutes. Let's talk about org structure. So org structure of asset accounting. So now the key step is the chart of depreciation. So the chart of depreciation is the directory of depreciation areas organized according to business management and legal statutory requirement to manage depreciation and valuation of assets. These chart of depreciation are usually country specific and are defined independently of other org units. SAP supplies a reference chart of depreciation for each country. So what happened is, chart of depreciation is a country-specific item. So for every country, you have different local laws of depreciation. You have to follow those laws. So chart of depreciation, usually SAP supplies by country, and then based on number of company codes we have in that country, we use it at a country level. For example, if we have in US we have 4 company codes, so all will use the same chart of depreciation. And it's the directory of depreciation area. So we'll talk about what is depreciation areas in few minutes. So that's chart of depreciation at a high level. Okay. Each company could use one chart of depreciation, chart of account, and one COD. All or several company codes can work with the same chart of account and the same chart of depreciation, as I mentioned. So, for example, in US you have 4 company codes. All 4 can use same chart of depreciation, but it is always country specific. The US chart of depreciation cannot be used by Canada. Germany cannot be used by France. It is always a country specific item, not company code specific, rather country specific. So let's talk about depreciation area. So that's one of the important items we need to discuss. Depreciation area is something which determines the valuation of your asset. For example, if you are a US company, you have valuation in US GAAP. You follow IFRS also. You have IFRS. You have local currency. You might have a group currency. You have tax areas. Tax valuation will be different for each asset. So the depreciation area is basically a 2-digit determination which determines the valuation level of the asset. For example, 01 is US GAAP, 34 is IFRS, 36 is local GAAP. Then we have 10 acres, US tax. Then we have makers, state tax. 19 E&P for US. 52 for India, we have India income tax depreciation. So all those valuation of the asset happen by country. Every country has their own requirements, so those happen by country. So that's why I said chart of depreciation is always a country specific item. Every country will have a different areas. Every country will have a different logic of calculation of depreciation. So that's why the number of the areas might vary. In US, you might have, let's say, 4 areas. You have 01, you have 34, you have 30, you have 10, you have 18, you have 19. But in India, you might have additional 52 and 36 for local GAAP and for income tax. Singapore, you might have additional 15 and 16 for Singapore, Malaysia. And value can be different for all these depreciation areas. It depends. For example, if an asset is for $5,000 in US GAAP, it might be depreciated at a rate of 10% for US GAAP, but it might depreciate at a rate of 20% for US tax. For state tax, it might depreciate at 80%. It depends, all the calculation being driven by legal requirement and legal methods. We'll talk about more about chart of depreciation and company code in few more sessions. That's an overall introduction of asset accounting. So just to give you a high level overview, again, we have asset accounting is a subsidiary ledger which is getting connected to GL. It is closely integrated with other modules. Chart of depreciation is one of the key items, which is a country specific thing, and it is a list of, or you can say, the directory of depreciation areas.
In continuation with our previous topic, we will be talking about, we discussed in the last topic where we were talking about new asset accounting overview and how new asset accounting will work in Simple Finance as well as in EHP 7. So today we will talk about, some changes in new asset accounting has been introduced, which were not there in Classic, but these are specific to new asset accounting, and those are functional changes related to fixed assets. So let's talk about the benefits first. What benefits companies are getting for implementing new asset accounting. So unfortunately, for companies who are going to Simple Finance, there is no choice except new asset accounting. Although in EHP 7, you have a choice whether you want to use classic asset accounting or new asset accounting. So talking about the benefits, first benefit we have is flexibility concerning leading valuation. No more hard coupling of depreciation area 01. So previously what was the case is in classic asset accounting that the depreciation area 01, the main gap area, was basically supposed to be doubled because that was the only area where you can have your valuation of your assets and only in one gap, and all the postings has to come to that area, and that area post to GL only. It was not possible for the other depreciation areas to post to GL. Only this area was marked as posting to GL 01 status, and rest others having 0 status, which means cannot post to GL like tax. And it was similar for local GAAP. Now with new asset accounting, SAP has given option to you can post to GL account to the different ledger. For area, let's say area 36, which is tied to your local gap, you can post to different GL. You can have your valuation of asset differently as far as your gaps are concerned. It's not only you are mandatorily being forced to value your asset only at one gap. Only one depreciation area per valuation necessary, no further depreciation area necessary to portray a parallel valuation. So previously what was happening is you have a US gap, you have local gap. So one area was posting to GL, and for other areas you need to create a delta depreciation areas. With simple finance, or you can say new asset accounting, when you have multiple depreciation areas which can have your valuation, so it is not necessary that you need to have delta depreciation area concept. Okay. Real-time posting for accounting principles. So as we just mentioned, local gap also post to the GL, posting to different posting period possible. Restriction beginning and end of fiscal year needs to be equal. So for local gap, for US gap, let's say you can post to different fiscal years as long as the beginning and end date of the fiscal years are same. If your beginning year and the end year are different, dates of the fiscal year are different, you cannot use fixed assets in SAP. For example, if it is India, April to March, if it is US, January to December, so then in that case, SAP fixed asset or asset accounting does not understand the different fiscal year at the local gap. No restriction to set up different account determination, different valuations. So now there is no restriction. You can, valuation can be different, and as well as the new thing is you can have different account determination for different valuation. So you can tell system for area 01, I want to post a cost to this GL account, let's say 170000, but for area 36, I want to post a cost to 180000, something like this. So, but there is not restriction that only it will go to one GL. So different valuation, different GL accounts can be used. New transaction or accounting principle specific document. So it is very obvious when SAP is allowing the posting to two different GL accounts for US GAAP for the leading ledger and the non-leading ledger, then as per the depreciation area or the accounting principle, your document number will be different. You will have separate document for leading ledger, and you will have separate document for non-leading ledger for the same transaction. No matter it is going to the same GL or different GL, but the document number will be different. Always separate document for accounting principle. Post the values correctly right from the beginning using multiple parallel documents. So right from the start of the system, you post into you have a different document numbers which will help you to identify the right GL, identify the right value and the right reporting. Smooth integration with parallel valuation for CAGM. Parallel valuation for activation values immediately with the value activation of AUC. So AUC is more improved now. We will talk more about AUC in the coming slides or coming sessions. So an overview of new asset accounting. New asset accounting is always based on active ledger, active new GL accounting. So new asset accounting cannot be used with classic GL. New asset accounting can only be used with new GL. Also, classic asset accounting is not available anymore. In simple finance, it is now out. It is not delivered as a business function. So, and activation at a client level. So, new asset accounting is something if it is activated at a client level. And the restriction is once you activate, you cannot go back. You cannot turn back. Both approaches are possible, ledger approach or account approach. So, you can, depends on for parallel accounting, you can have any approach based on the requirement, ledger approach or account approach. The new depreciation calculation engine is mandatory. So you have to activate a new depreciation calculation engine, which is a financial extension. You have to activate EAFIN, which will calculate the depreciation values based on the new engine. Out of scope. So with new asset accounting, you cannot use the below functions. You cannot use joint venture accounting. You cannot use lease accounting engine. You cannot use classic real estate. You cannot use public sector management, the fund management using request module. You cannot use ALE functionality, the transfer of assets. You cannot use transaction ABUB, and old depreciation engine not available anymore. So there are restrictions So before you select with the client, you work with the client, you need to ensure that you have the right decision and option with which you are going. Transactional architecture. So there is a new concept being introduced, the technical clearing account. So what happened with technical clearing account is, if you are using accounts payable, you can take advantage of the following benefits of integration. For an asset acquisition without reference to purchase order, you can post asset acquisition and corresponding payable due from vendor in the same transaction. This reduces your data entry. So what happened with technical clearing account is, previously when you post in GL entry, you have the asset acquisition entry, you have asset account debit to vendor account. But with the new system functionality, the accounting entry happens as asset account debit to technical clearing account, a technical clearing account to vendor account. So technical clearing account is a reconciliation account, automatically gets zero out, but still it is required. So we will see why this is required and what are the usages of this. We will see that in a few minutes. Each transaction on vendor account is a subsidiary ledger of accounts payable on the asset account in the new asset accounting, directly influences the corresponding GL. So technical clearing account comes into picture and subledger and GL are automatically reconciled, and also the technical clearing account is the reconciliation account. So it is connected to the ledger. Now the differences which are coming with technical clearing account is, system generates several documents. The operational entry document post to TCA. The operational entry document does not update the asset subledger. The asset data is only used to perform checks. Accounting principle specific document goes to technical clearing account in issue as well as the asset recon account and update the asset subledger. So multiple documents are generated based on accounting principle, based on depreciation area. Multiple documents are generated, and at the end the technical clearing account gets zero out, and the value get posted to asset as well as the vendor. So we will see the architecture. This is a high-level architecture for this. You have an operational entry document, you have technical cleaning account, and then it posts a ledger-specific document at the bottom, and the technical cleaning account comes into picture, and everything goes to asset finally. So that asset tables get impacted, but it is going through a different route, going through a technical clearing account. That's a difference. This is all about technical clearing account, which is one of the major change in new asset accounting. This was not there at the part of the classic asset accounting. Entirely a new concept, new configuration. Okay. So in continuation with what we talked about in new asset accounting, the recent changes happened. So just to give you an overview with introduction of new asset accounting in SAP, SAP has changed the concepts and lot of configurations in asset accounting. Since it was introduced in EHP with ECC 6, EHP 7, but later it was then part of Simple Finance. So some of the key changes included were the technical clearing account, which we talked about in the last session, and then some of the key functionalities which are restricted to use with new asset accounting. So we will see more changes as we move on. So to complete the concept of technical clearing account, so what is the use of technical clearing account? We discussed, what it is all about. Now, why it is used, that's a question. So technical clearing account is something, when you post in a accounting entry for asset procurement, you debit the asset and you are crediting the vendor when you have an automatic purchase through the purchase order or without purchase order. That's what the concept all about. But with introduction of this technical clearing account, the logic is changed. With this, now the accounting entry happens as asset account debit to technical clearing account and technical clearing account to vendor account. Now, what is the benefit of having, at the end, the TCA gets zero. When I say TCA, it's technical clearing account, so please bear with me. The TCA gets zero, but what is the use then? We are crediting in one entry, we are debiting in another. In the same document itself, same instance itself, we generate a multiple document number, and then it gets out to zero. Then what is the benefit? This is a very logical question, some of the clients asked, and it was important to explain them, to convince them then why this is introduced when everything was fine. So till now, there was no concept of parallel valuation posting in accounting, in asset accounting. So parallel valuation was there, but parallel valuation, posting to different GL account as per the ledgers who are not there. So now with new asset accounting, what you can do is you can post to GL at a leading ledger at different GL and the non-leading ledger at a different GL. At the same time, you have new functionality where you can capitalize the asset at one gap and let's say non-leading ledger, and you expense the out at US gap. So this is a very normal situation. So taking an example of US and India. So in US, anything which is $5,000 or plus is a capital item. But in India, anything which is a 5,000 rupee INR item plus is a capital. So now if you convert 5,000 INR into USD, it's somewhere around $100. So in India, if you're making a purchase of $100 is a capital, but in US, $5,000 is a capital. So if a company having a subsidiary in India headquartered in US, following both the gaps, how do they manage? If they purchase something in India for $100, it's a capital for them. Then how system should expense out at US gap? So this technical clearing account actually helped them to get that done. With this, what you can do is at US gap you post to expense account. The entry would be expense account debit to technical clearing account, and at local gap the entry would be asset account debit to technical clearing account in different gaps. And at both the gaps the next entry would be technical clearing account debit to vendor account. So if you see the total of both the document, the technical clearing account gets zero out, but it divides the values as per the gap requirement. Or you can capitalize to different asset also. You can say, if you see this example, asset to TCA, ledger group 0L and accounting principle IFRS, and another is ledger group N1 and accounting principle local gap. And TCA to vendor, as I just mentioned, it will be at both the gaps with the blank group and both accounting principles. So go through this entry and then it will be more clear. Right? Same entry going to two different places, and at the total gap level it goes to zero. Okay. More information about technical account always get out to zero. So as we just talked about, TCA will always be zero. It can never have a balance. Operation entry document will be posted by the entered document type, the rest under document type AA. So when the operational entry document will be posted by the entered document type. So it's like KR. The vendor document will be posted as KR and the rest will be under AA. Accounting principle specific document will always be created. So system will automatically create an accounting principle specific document. Using different recon account per accounting principle is possible. So we just talked about that. For leading ledger, you can have different GL. For non-leading ledger, you can have different GL. Technical clearing account will always be posted even if it is a certain accounting principle not represented on the asset. In this case, 100% IFRS and 0% local gap. Posting will be redirected to account for non-operating expense. So it will always be posted. No accounting principle is represented in the asset by area which post APC. The system issues an error that can be changed into warning, and statistical areas in FIA will be updated. If your depreciation area does not represent any accounting principle, then system will give you the error. Deactivating dep areas for any asset. During integrated asset acquisition, you can deactivate the depreciation area, but it is not required anymore. So what you can do is, while creating asset, you can deactivate that. I don't want to purchase to this asset, then system will understand, okay, this area is deactivated for this asset, and it will allow you to move forward. Only relevant accounting principle needs to be represented on an asset by the corresponding depreciation areas. All posting issued with FIA will only affect those accounting principles which are relevant for the involved asset. So if the area is deactivated on the asset, then it will not impact that accounting principle. P&L posting for all other accounting principles have to be handled manually by the end user. If a certain accounting principle is not represented on the asset by an area which is post APC online to GL, the posting will be redirected to account for non-operating expense. So it can post directly to expense if it does not found the area there. If no accounting principle is represented by the asset by an area which post APC, system issues an error that can be changed into warning. So you have option to change that. Another change is the settlement transactions. So previously when you were settling the AUC2 asset, where transaction AIAB, you settle it, you maintain the rule once and system automatically posts to all relevant depreciation areas. But in new asset accounting, what you have to do is you have to assign the settlement rule per depreciation area, and then system will settle according to that. It can be same settlement rule you can replicate for area 1 or area 36. It can be different. For example, for one area it can be expense, for another area it can be capital. But you have option to segregate the settlement rules. Controlling generates accounting principle specific posting as well. SAP Control CO module also generates accounting principle specific document. So this is how it looks like. You can settle to one, for one area you can settle it differently, for another area you can settle it differently. Another concept is the appendix ledger. This is the very, very new thing. So before we wrap up, let's talk about appendix ledger in new asset accounting. So what happened was, I'll give you the background. With the introduction of new asset accounting, when we have different fiscal years for countries like India, US, so SAP was not allowing any configuration for the countries having different fiscal year, because it says the fiscal year is different for the local gap. So then the solution came up was, you create an appendix ledger. Now this is known as extension ledger, and then you club that extension ledger with the local ledger, and then you make a ledger group, and you assign that ledger group to area 36. The moment you assign that area to area 36, you can use asset accounting. System will allow the configuration to move on for the configuration. So with SAP Simple Finance, SAP brought out new asset accounting, which basically allowed to maintain ledger accounting principle. We first assign an accounting principle to a ledger and company code combination. So that's what we do. So this was the need to have the configuration in place. Otherwise, system was not allowing the configuration for different fiscal year countries. Okay, so those were some of the key changes which were introduced in new asset accounting. So as we move forward in coming sessions, we will talk about the configuration of new asset accounting, and then we will move forward with the system, and we will show you how the configuration works, how it is integrated with GL, and how changes being introduced and how the transaction works.
So till now, what we discussed is, we talk about new asset accounting, basic overview, how it works, what has changed. But now we will get into the system. We'll configure the new asset accounting. The system we have in front of us is currently S4 HANA system. You can see at the bottom, I'm targeting the cursor. It's S4 HANA system, where SAP has changed the asset accounting from classic to new. In EHP 7, we get an option to select from classic or new, but in Simple Finance or S4 HANA, there is no option. It simply says only new asset accounting. Okay, so we'll start with end-to-end configuration. We will see how that goes. We will start with a new company code, fresh company code. We will do the basic configuration for the ledgers, because the ledger is playing the important role in new asset accounting. So we will configure that end-to-end. So let's start with this. We will create a company code, and then we will move on. And that company code will be the base of this entire training session. So we will say company we will give country US, we will give language English, and then we have a currency USD. And then we save it. We will have a new transport request. We will create a new request there. New asset accounting, end-to-end, new asset accounting. And then we have enterprise structure, TR number 1. We will track with the numbers. Okay, and then save. So we will save all our configurations related to asset accounting, related to enterprise structure in the same company code. Then we will have edit, check, delete company code. So we will copy, delete, check company code. We will try to copy something. At least we should have. We will copy from the standard US01 company code. That will help us. And we will say AA01. Only copy the GL accounts if you want to look at the same chart of account as the source company code. Yes, I want to copy. Yes, I want to copy. Number range, yes. So I'll copy everything from enterprise structure perspective. This more easy job. Rather creating everything fresh, I'll have a new one. Yes, I will transport this. I will say okay. Company code US00 copied to AA01. There we go. And there we have. So now AA01 will have all the features of US01. We'll give it a good name. Apple INC. Better. Okay. Now we will open another session and we will see the global assignment of this company code. What all is assigned. Because we have to make a copy. So it's OBY6 where we'll can see the global settings. We will see what all things have been assigned to this company code by default. So we have a chart of account assigned. We have fiscal year variant there. We have a company. We can say, okay. And then we save it. So that's my company is ready. So let me see if I have some GL accounts in my company. If I go to FS00, I should be looking at some GL accounts. I should have something in my company. AA01. I should be looking at a company code level. So I should go to GL accounts and company code. And if I see this, I have all the chart of GL accounts. Okay. So that's good. Now, since we have created a company, let's see what the posting period variant. I'm still not into asset accounting. I'm still working on the global settings of the company code. So we still have posting period variant as 0001. So let's see what is in 0001. We'll go to OB52. We will see what is there in 0001. Now we'll go to financial accounting global setting. The main configuration starts from here, where we have the GL setting, we have the ledger settings, we have all the key settings there. Okay, just give me a second. So we'll get into financial accounting global settings. We have ledgers, define settings for ledgers and currency types. So we have 3 ledger defined. So this is very important. We talked about this in the theory session as well. This is very important. The ledger settings. The standard ledger is the leading ledger. Then we have A1 as, we will name it as appendix ledger. And then we have this one is non-leading ledger. Okay. Deactivate ledger for a company codes. So we are not deactivating anything. This is already done. Then we will see execute consistency check for GL settings. So these are all the new GL settings. Okay. Let's see we have a number range or not. AA01 is my company code. Do I have a number range or not? I do have. I should not have any external number range. Okay. There we go. We say okay. Now let's try to post a JV because that will help us to understand whether the system is working fine or not. So we will go to FB50. So I'm just posting a JV to check whether my system is fine. Do I need to do something? So I'll say debit my, and it's $10,000. test posting. Okay, test, and then I'll try to put some cash or bank account so that I can try to book and I can say this is credit, and there we have $10,000. Okay, so there is a tolerance still not defined. We have to define the tolerance. I think it should work fine. We have defined the tolerance. So this was just again the enterprise level settings. I have to, I think, come back and I'll enter again FB50. So this transaction will at least help me to understand whether my GL settings are complete, because until I complete my GL settings, I cannot go to fixed assets. I'll select cash. Okay, no amount tolerance entered for company code. This should have been defined. I just defined this. I think we should be good now. We should be able to post a JV. Once we post a JV, we should be moving ahead with. I need to go back. These are the normal errors you face when you do the config. So don't worry about these. You will try to learn to resolve them. That's better now. It requires a cost center, and I should be giving my cost center to which I want to put the cost. So now I have to do my CO settings first. That's what system is saying. So let's go to controlling area. We'll go to config. We will go to enterprise structure. We will go to definition. We will go to controlling, and we'll go to maintain controlling area. Okay, so this is what we have. Okay, now we'll create the cost centers. We'll go to master data first because that's pretty important. We have created the company code. Now our company code is ready. So we will now try to configure the fixed asset accounting in this. We'll go to the first node where we will have org structure. Okay, so we'll first assign the chart of depreciation. First copy from one US and we'll make it one AA. So it says one US does not exist. I think it is 0 US. We can check. Yeah, 0 US. So we'll copy the chart of depreciation. So what we are going to do is we'll copy the depreciation chart and then we will assign it to our company code. It's said copied. Then we can rename the chart of depreciation. We can say chart of depreciation for AA. And then we have copy, delete, depreciation area. So we'll see what all we need, what all we want to delete in terms of depreciation areas. I'll explain this activity. This is a critical activity. So this activity determines what all depreciation area you need in future, what all valuations of assets you have in your organization, and what all reporting you need for what all reporting is required for the particular company code, and what all postings will be coming, which all areas can post, which all areas cannot post. All this setup comes into this table. Okay, so you can go through this quickly. Then I'll delete some of the areas just to show that how can we delete the areas. So let's take an example just for the sample purpose. Let's delete these two areas. We don't want them. Okay. Now system says assign the ledger group. It is the accounting principle or the ledger group where you need a parallel reporting. So 60 is the accounting principle and the ledger group is 0L. 0L is the leading ledger. So if you go by the generic structure, leading ledger is always 0L, and for non-leading you can give your own name. So now my chart of depreciation is ready. What I didn't need to do next is assign chart of depreciation to company code. My company code was AA01 and my chart of depreciation was 1AA. Okay, so I can assign here. That's how I make the relationship between my company code and my chart of depreciation. So these are the global settings or structure setting. There is another org structure setting is the number range and the asset class. So number range is something, SAP gives you two options. You can have a number range from one company code. Let's say you have 50 company codes. You can say, okay, my number of the assets will be running across the company code rather having by company code. So it is more suitable for the shared service environment. If the operations are restricted to by company code, then it is the customer's choice. You can go by company code. Here we have specified number assignment across company codes. So AA01 will take number range from AA01. That's what it says. I can put this any other company code as well. So whatever number range is maintained in that company code, system will take the number range from that company code. I have a choice, whether it is company specific number range or across company number range. Moving ahead, next step is the asset class. So let me give you the background of asset class. So the way asset class works is asset class is a bucket where your asset, when you create an asset, it will ask which class you want. You have a machinery, you have plant, you have land, you have building, you have equipment, you have vehicles. You create a buckets. Asset class determine the number of the asset. Asset class determine the GL account of the asset. It is one of the key element when you talk about asset accounting to GL integration. It is one of the key elements. Okay. So as we move ahead, we will see how this works. So behind the scene, asset class is assigned to the account determination, and account determination is assigned to the GL account. Technically, every asset has to fall under one or the other asset class, and it cannot be more than one. You cannot say that this is asset X asset is falling under asset class machinery and asset class equipment. No, it has to fall under only one and only one asset class. So we will say define asset class, and we will make a copy of this one. So we will make a copy machinery AA001. Okay, we'll copy another one. We'll have at least 3 asset class. We have this one ZAA002. Then we will have copy vehicles ZAA003. Okay, so let us see what we did. These are the 3 which we make a copy. Okay, we can rename them. And now we will see what all is sitting in behind the scenes. Okay, so here what we have is asset class number, we have asset class name, then we have account determination. That's what I just said. The account determination is something which drives the GL account. Okay, so this is driving the GL account behind the scenes. Then we have number range. Which number range the one is copying? Here we have 03. Let's see what we have here. Here we have again, here 03. Here we have 02. Okay, so this is driving the number range. If you want to block the asset class, you can lock this one. Asset class is locked, so it will not allow anything. If you go through the help, this indicator prevents to new asset being created in the asset class. So system, whenever you want to create asset in this, system will say this is blocked, you cannot create it. Okay, so this is my asset class. Then we come to account determination. We just looked into this. So these are the account determination which are there. Behind the scene, this will call the GL account. So we can create our own if required. If not, we can use the existing one. So this is something very important, from GL account perspective. So we can create a copy of this. Let's do one thing. Let's create one asset class on our own. Now Z001 we will assign to our asset class. Okay, here we can assign the one we created. So we can create our own account determination. So basically the objective is this account determination will drive the GL account which should be used when you capitalize the asset, when you depreciate the asset, the AD account. And I don't know how it get blocked. So all the GL account determination is driven by this particular account determination. Now let's see the number range. What number range is assigned? We'll try to change the number range also. So we don't have anything here. So we say 01. I'm just creating a very real example that's how it works normally. 29903, because we have created 3 asset class, so I'll try to ensure that I assign each of them to different one. Now I go to my asset class and then I see first one, then I assign range. Then I go to my second one, I assign my range 02. Then I go to my third one, then I assign range 03. Okay, so this is how it works. So I've assigned my range, the number range I created to the asset classes.
Alright, let's test your knowledge. Here's a question for you. What is the purpose of the SAP New Asset Accounting component? Option A, to manage financial accounting. Option B, to manage procurement processes. Option C, to manage asset acquisition and depreciation. Option D, to manage inventory. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck! Type the correct answer in the comment section. Hey there, ready to level up your asset management game? Our SAP New Asset Accounting course is your ticket. Take it easy at your own pace right here on our platform. In this course, you'll dive deep into SAP New Asset Accounting. Think of it as your ultimate toolset for handling supplies, making sure they're where they need to be when they need to be there. Covering all the bases, from beginner basics to advanced techniques, this course is crafted by seasoned experts who know their stuff. Your instructors, they're top-notch, with years of experience under their belts. They're here to guide you through and answer any questions you might have. But hey, don't just take our word for it. Our students rave about how valuable this course is. Folks just like you have found it super beneficial. And the best part, it's budget-friendly. Quality learning that won't break the bank. Ready to master SAP New Asset Accounting? Sign up today on our page. For more details, hop over to ZaranTech's website.
So here it says define depreciation area. So uses in this activity, you define depreciation areas. You can change the definition of area, adopt it from standard chart of depreciation, and you can add new depreciation areas if needed. So since, if you remember, we copied it from 0 US. So now here our option is either if you want to change the area, you want to delete the area, if you want to add more areas, you have option to do that. For parallel financial reporting, that is valuation based on different accounting principles, you can define real depreciation areas and derived areas. The value in the derived area are calculated from the values of two or more real areas using formula you define. The system does not store the values from derived depreciation area. They are instead determined dynamically at the time of request. So derived depreciation area concept is now no more in use in new asset accounting. Okay. So this is what we have at this point. I can rename if required. US GAAP, local currency, US GAAP group currency. Then I don't need 30 and 31 because in US I don't have. Okay. Area type. What is area type? Let's read the definition. So area 1 is type 1, which means valuation for trade balance sheet. Of course, it's required. Area 10 is 10. What is 10? US Fed books. Okay, that's correct. Area 11 is 12. US Altmin. Area 12 is area 13. Sorry, type 13. Area 32 is type 6. Group valuation. That's correct. I think that's correct. That's the standard setting. We don't need to change anything. Let it be. Then we have defined depreciation area for quantity update. What does it mean? As if you've given something. I think it would be in the help. Okay. So in this activity, we specify which depreciation area you want to use for updating quantity. The setting is especially relevant if you are using collective low value assets. The quantity in the asset master records are only updated if postings are made to the area specified here. Okay. So for example, if you have purchased 100 chairs, okay, so all these are small items. So now the decision is you want to capitalize those 100 chairs as one asset or those 100 chairs as 100 assets. So if you are capitalizing those 100 chairs as one asset, then it would be one asset, and then in quantity you say it's 100. And then if you retire, if you do something or you sell those asset by quantity, it will be track that, okay, out of 100 you sell 10, so the quantity remaining is 90. So this setting is especially relevant if you are using collective low value assets. So that's why I just gave an example. If you have 100 chairs, you are capitalizing as one asset, then it is required. This prerequisites specified in documentation for the activity prepare new asset accounting are met. Standard setting for the purpose of compatibility with earlier versions, the system uses depreciation area 1 for updating quantity unless you specify a different setting. Okay. If you change the depreciation area used for quantity update, the quantity information the asset master record is not changed. Asset subledger posting document to which posting were made before conversion keep their quantity as it is. So let's take an example. You change the depreciation area of quantity update from dep area 1 to area 31. Now document were posted to with area 1 explain the quantity information in the master record. After the conversion, further quantity changes are explained using area 31. So if let's say till certain date you are using quantity update for area 1, and after certain date you use different area, let's say 31 here. So it is not that all the data will get copied from 01 to 31 because you have changed the setting. So the history will be maintained for area 01, and later when you get the new assets, that for those area 31 will get updated. Okay. Specify a transfer of APC values. This is very important. In this activity, you define transfer rules for the posting value of depreciation areas. What happens is, when you have two areas, we just saw the example area 1 and area 32. Okay. Now, area 1 is local currency, area 32 is group currency. So, how group currency area will get updated? So, system will take values from 01, right? Whatever is in 01, it will, let's say 01 is in euro, for example, and then area 32 is in group currency, then system 32 will always be a conversion of the whatever values we have in 01, it will convert into 32. In this field, you specify the reference depreciation area that provide value to other depreciation area. So in our example, 1 is providing value to 32. The system transfers the posting amount of any transaction that affects acquisition and production cost from this area to the dependent area. So whatever APC is hit to area 1, whenever there is a change in APC, you add or you reduce, system will automatically transfer the value to area 32. You can determine whether this transfer is mandatory or optional. It is up to you. If you only define optional, then you can enter the posting values for the depreciation area during posting. So normally there are a lot of dependent area like tax. Tax always receive value from GAAP. So normally this is a very important setting that you have a right determination of values. Okay. Depreciation area for showing asset value in foreign currency is the same value as the basis of local currency. Exactly, this is what I just said. 32 is conversion of 1. Let's say 32 is in euro, 1 is in euro, and 32 is in USD. So whatever value you post in euro, system will convert into USD and give the value to 32. You therefore define the foreign currency depreciation areas for mandatory transfer of posting values from reference area. Note that the transfer of APC values is only possible from area from which same accounting principle is assigned. You cannot transfer from leading ledger to non-leading ledger area. Those areas should always lie within your same ledger. So let's see what we have set up the rule. Okay. So we are saying 00 will always post. 00 means it will get the real posting. 10 will get a copy from 1. 11, 12 will get a copy, and 13, since they're all taxed, they'll get copy from 10, and 32 will get a copy from 1. Now, there is a reason why 11, 12, and 13 are 10. It could also, you can also say that why we are not putting 01, because 10 is also copy of 01. Now, if we make some adjustment in 10, it's a tax adjustment, and we are not making that from 1. So, if we specify here all 1, then these areas will not receive that adjustment. So, since all tax areas should be aligned, that's why we copy all those areas from the right tax area. Set this indicator if you want to ensure that the system transfer all APC related posting to this depreciation area from the transferring depreciation area for no opportunity for changing the value. So you have to set this indicator saying that I just need a copy, don't play with my numbers. Whatever is there in the right in the copy in the main area, copy it to the next area. Specify transfer of depreciation terms. So as we just saw the logic for APC cost, same works for depreciation terms. For every area we have own depreciation term like default useful life, depreciation key. Now area 1 and area 32 are famous example. They will always have a same depreciation terms, right? The only difference is in currency. The asset should have the same life, asset should have the same depreciation in those two areas, right? So when we do that, then we define the takeover terms. So 00 is actual. And then we will say 10 should receive from 01. This should receive from 10. This should receive from 10. This should receive from 10. But 32 should receive from 1 because 32 is a copy of 01. So since it is a local gap and a US, and only the difference is in currency, it's a local currency, it's a group currency. However, the depreciation term should remain the same. But we will not check this. Reason? User should be allowed to change. If we check this, user will not be allowed to change. So for example, this one, 1 and 32 should always be identical. So we'll say user should not be allowed to change. So this is what we have in depreciation terms. So this is not relevant for international things. This is a very, I think, a country specific thing, German. This is not relevant. So if you go to the summary, we completed org structure, we completed integration with GL, we completed general valuation, we completed till depreciation areas. So we will continue with the last topic. We completed till here. Specify memo value. Now we'll go to the next topic, which is fiscal year specifications. So number one is the fiscal year variant. So to explain you what is fiscal year variant is something, like for one company, we are following the January to December fiscal year. So we define a variant in the system and we assign it to company code that determines which period will be 1, which period will be 2. For example, if the fiscal year variant is K4, it's the name of the variant. Then we will have K4 means April to March. It means period 1 will always be April. It can be, let's say V3. V3 is again a standard fiscal year variant, which is January to December for the US companies. Okay. So let's go into fiscal year variant. Specify other variants on company code level. What does it mean? So in this step, you specify fiscal year version of asset accounting on company code level that is different from the one in FIGL. So your main fiscal year is in FI, okay? But here you can specify different fiscal year variant at a company code level. Recommendation is usually you do not need a different fiscal year version for asset accounting. If this is the case, you do not need to make any system settings here. So it says you can determine different fiscal year for asset accounting. Let's see what are the options. Even though it is not recommended to do, but for learning purposes, we can go into this and we can say, okay, for this company code, follow this fiscal year. I can specify any other. Okay. Let us first rename the company. Not looking good. Our company name still sees country template US. That's not looking so good. This one. Let's name something. Okay. So I change the name of the company. Okay, so the next topic is allow different variant for different depreciation area with GL integration. What does it say? Okay. Allow differing variant for depreciation area with GL integration. In a standard system, you cannot define fiscal year variant for depreciation area that update to GL if a parallel ledger uses different fiscal year variant. However, in this activity, you can specify certain dep areas with GL integration that differing fiscal year variants. So there is a limitation here that you can use different fiscal year variant for different company, for some company codes at a non-leading ledger level, but the start date and the end date of the fiscal year should be same. Okay, you cannot have January to December and April to March fiscal year assigned. It doesn't work in asset accounting. So that's a limitation in standard SAP. So your start date and the end date should remain same. Your fiscal year, your periods can be opened and closed on different dates. So that's how it works. So here we can define if this company is following a different fiscal year variant. But we will not do this. There is no requirement. Specify other variants of depreciation area level. So it says at area level whether I want to change it or not. So I'll say here, and then I select this. So I can tell system. So what is the entry maintained here? Okay. So depreciation area level, it can be maintained, but again, you have to ensure that your start date and the end date remain same. Let me try to do this. System will give me the error. System should notify me that I cannot use this. So here we have the first day of the fiscal year of variant V3 differs from the first day of the fiscal year in K4. However, both variants must have the same start date and end date. Only the period within fiscal year can be different in two variants. That's what I just mentioned. So you cannot have two variants assigned where start date and end date are different. Your start and end date should be same. So as I said, system will give me error. Okay, no need to do this. Others are not required. Those are very specific. Currencies. Define depreciation areas for foreign currencies. In asset accounting, you can manage depreciation area in various currencies. The values from these areas can then be used for group consolidation or for other analysis. In this activity, you define depreciation area that manages asset value in a foreign currency per company code. For acquisition, the translation into foreign currency takes place at the exchange rate current on the posting date. So for example, we have two areas, area 01 and area 32. So area 01 is, let's say, the company code currency, but area 32 is my group currency. So the conversion will happen on the exchange rate on the posting date, whatever the rate is. So if my local currency is euro and my group currency is USD, so from euro to USD, the rate will apply on the day where I'm doing the acquisition. Not the cap date, but the posting date. Okay, so you need to maintain a daily exchange rate. That's very normal. A business has to maintain exchange rate, not even for assets, for other transactions. So here we define which currency my company uses. Like 0001 is USD. I can change group currency to, let's say, I'll make it my company is headquartered in Europe. So I'll say it is in euro. But tax areas I will maintain in US. I can save it. Then system will convert from USD to euro on the exchange rate whenever I do the acquisition. Specify the use of parallel currencies. Big one. If you use parallel currencies, assign a currency type that is suitable for the given parallel currency to your depreciation area. For the legal consolidation of your assets, you might only need foreign currency amounts, but not need a use a different basis of valuation, right? So you might need a different currency we just saw, but valuation will be same. For example, 1 and 32, the valuation will be US GAAP, but currencies are different. So if we go into this, chart of depreciation was parallel currency is not possible. See long text. Okay. So, however, none of the company code assigned to this chart of depreciation currently uses parallel currencies in GL. So I have one chart of depreciation, one AA, and that is assigned to one company code. Now, system is saying if you want to use parallel currency settings, you have to assign this chart of depreciation to other company code which uses different currency. If you don't have the scenario, then don't use this option. So this is a very rare scenario. If one country, I have 10 company codes, all will use the same chart of depreciation, then there is no use of having parallel currencies because all of those company codes will follow my same currency which is there used in that particular country. For example, for US it would be USD. Group assets. Let's see what is group assets first. As a general rule, the system calculates the depreciation level of the individual assets. Certain type of calculation needs a tax requirement, such as in USA, make it necessary. However, to calculate depreciation at a higher level, for this purpose, you can group assets in FIA system together, so-called group assets. So you can group assets together per depreciation area to form a group assets. You make necessary system settings and do the following steps. So I have to tell system whether my area manages group assets, yes or no. And here I have to specify assets classes, which asset class will be using group assets. Okay. So we are done with general valuation. The next topic we have to take is depreciation. This is one of the very complex topic. Okay. So let's start with depreciation. So let's talk about what are the depreciation methods. What are the modes of depreciation? So we have 4 different kinds of depreciation: ordinary depreciation, special depreciation, unplanned depreciation, and repeat depreciation. So let's talk about what is unplanned. Ordinary depreciation. So ordinary depreciation is something which is calculated on the regular periodic basis due to the normal wear and tear. For example, you have a life of the asset. Let's say you have a value of $12,000. Life of the asset is 5 years. Total life is 60 months. And then you simply divide $12,000 by 60 months, which is $200 a month. So every month you will reduce the value by $200, and at the end the value will get to zero. Another one is unplanned depreciation. So unplanned depreciation is something which happens without normal wear and tear. Let's say you have a car and it was getting normally depreciated, but you had an accident. So the value of the car will suddenly depreciate or come down. Special depreciation is something which is charged for the tax purposes, and it is mostly for the tax areas. So you'll see all those calculations, how it runs. Let's first get into ordinary depreciation. Determine depreciation areas. In this step, you determine the depreciation areas in which you want to manage ordinary depreciation. This specification means that this value type is allowed in the depreciation area, that the system does not issue an error message when the depreciation area, based on the depreciation area terms in asset master record. In the detail area screen for each area, you can also mention whether positive or negative values are allowed. For example, if you want to calculate a negative depreciation of positive APC, that's a normal procedure in an area, you must indicate negative value including 0. So first we will see which areas should calculate depreciation. So in our company code, our chart of depreciation, the one we are working upon, all the areas should follow the ordinary depreciation rule. Then we have assign accounts. Which account should be used for posting? We used this account previously when we did the actual configuration. This is not required, the unit of production depreciation. So that's how the ordinary depreciation works. Next one is the special depreciation. Again, same thing we have to do. So we determine depreciation areas, same screen. So special depreciation will only be calculated for these areas, for tax areas. Let's save it. Then we have calculate ordinary depreciation before special depreciation. What does it say? The system distinguishes the following type of depreciation: ordinary depreciation, special, unplanned. The order in which system determines the type of depreciation is somewhat flexible. So this is how system calculates the depreciation. So in the standard system, the ordinary depreciation is calculated before special depreciation. If the reduction in depreciation is necessary, it takes place in the reverse order. Okay, so you can tell system, first I need to calculate my ordinary, then I need to calculate my unplanned, then my special. That's how it will calculate. And then we have the same thing, assign accounts, the one we just saw. Develop enhancement for developing company code relationship. In this step, you define your own method of determining company code relationship using a prepaid prepared customer enhancement project. The company code relationship type is deciding factor for the transfer method to be used when you conduct IC transfer. So normally, it is determined based on company code, company ID. If you see here, check company ID. So here, it shows the global data that based on this ID, we will have an intercompany transfer. Okay. But if you are using different character, you can customize the system, but that's complex and not recommended. Right? So normally SAP recommend to use the standard way for this. Next one. Specify gross or net transfer method for manual transfer. So if you are doing the manual transfer, then what will happen? You only need to make the following system settings if you plan to post intercompany asset transfer between systems or between clients. These system settings are not required for IC transfer within one client, since you can post this transaction using automatic procedure. If it is a multi-client system, then Then you need to do this. It can be posted in two ways. First is you retire at one place, acquire at another place. In this step, you define the features of the transaction type used in manual asset transfer. In particular, you can specify the following. And you can designate a sending or a receiving company must always be specified. That cumulative value adjustment can be entered along with the APC being acquired when making the acquisition posting. For automatic transfer within the client, you can make the specification in the transfer variant. So it is a cross-system transfer, then you need to do these settings. So it's a two-step process. One is you retire at one place and then you acquire at another place. Do not post to affiliated company, and from here you say do not post to affiliated company, and it is simple, you retire at one place and acquire at another place. It's a manual process entirely. Now comes the capitalization of AUC, another key transaction in asset accounting where you capitalize the AUCs, and AUCs can be created in two ways, in three ways rather. You can create AUC directly, you can create through internal order, or you can create AUC through project system module. So you have three ways to create AUCs, and ultimately all those AUCs will get settled to asset for capitalization. First is define transaction types. So in transaction type, here you define which, when you are acquiring asset of the prior year acquisition from investment measure. Investment measure is a project or internal order. So here standard SAP has given the transaction types. You can use them or you can customize them as per the requirement. Allow transfer transaction type for asset class. This is again, the down payment one. This is important. Determine cost element for settlement to CO receiver. When you settle an asset with the line item management, it is possible to settle debits to CO receiver. This might be necessary if debits were capitalized to AUC by mistake. The system requires a cost element in order to make this settlement to CO receivers. In this step, you determine the cost element with which the line item of assets to be settled to CO receivers. So, for example, you have by mistake you put a debit to the AUC, and then you realize, hey, it's not an AUC, it's a expense, and it has to go to cost. Now, to which cost element it will go? Cost element for settlement AUC to CO objects. So you can settle the AUC to CO object to cost center, but for that, system will ask you to give me the cost element. Okay, then you have to give the cost element. Normally, this happens normally by mistake only, that you capitalize some expense on AUC and then you decided it is supposed to be, it is not an asset. Now where to settle that AUC? Value is already standing in AUC. Then you can settle that to P&L. Settlement profiles. In this step, you define settlement profile for settling AUC. You can store one profile in the customizing definition of each company code. The system then uses this key when there is an asset under construction to be settled at company code. For settlement of AUC, SAP delivered the standard profile as a standard, AI. So when you settle the AUC to an asset, SAP asks you what profile you need. the one which standard SAP provides. What is this? So it says to be settled in full. Object type is FXA, which is an asset. Document type is AA. Percentage settlement allowed. Amount settlement can also be allowed by amount. And then here you have option valid receiver. Who should receive the asset? The value from AUC. So AUC will send the value to the asset. That's why it says settlement required. If you want to settle the AUC to the cost center, then you have to allow this another profile, and then you have to give cost center allowed. Settlement required. And then in the next step, you assign this. We have more. And in the next step, you assign this settlement profile AI to the company codes, which all company codes want to use AI. So let's say this want to use AI. Specify calculation of AUC and down payment. In this step, you determine how the system will deal with the down payments and AUC and their closing invoice during settlement. The system setting is particularly relevant for representing down payment from previous years in the asset history sheet. And the standard setting say the system capitalizes down payment as follows in standard system. So in the standard way is the moment any down payment is booked on AUC, system takes it into asset account. If you capitalize a down payment from the previous year and the closing invoice from the current year together, the amount of the down payment is transferred with the T type for asset transfer from previous year, and the only difference between the closing invoices and down payment is transferred to the current year acquisition. This is very interesting. Try to understand it again. If you capitalize a down payment from the previous year, for example, there is an invoice down payment happened in December for $100, and the closing invoice is from the current year together, and the invoice comes for $1,000 in January. The amount of the down payment is transferred $100 with the T type for asset data from previous year, and only the difference between the closing invoice and the down payment, which is 1000 minus 100, which is 900, is transferred with the transaction type for current year acquisition. So what system will do here is system will show 100 in as a capitalized in previous year, which is December, and 900 will be capitalized in current year. So that's how system will treat the asset. And accordingly, your depreciation calculation will be driven. If you want to change the default, you must set the indicator for capitalization without down payments. Indicator transfer down payment from previous year. When you set this indicator, system ignore down payment during the line item settlement, and the total amount of the closing invoice is then always transferred to the capitalized asset using the paste of the year at the current year at the closing invoice. So what it says is, if you set this indicator, system will not do the capitalization of 100 in previous year and 900 in current year. It will do everything, the $1,000 invoice capitalization in current year if you set this indicator. This is an affordability side. When the indicator is not set and you capitalize a down payment, system transfer the amount of down payment from the previous year to the old asset data. So that's how it works. The moment you check, system will capitalize $1,000 in current year. The moment you uncheck, system will capitalize $100 in previous year and of down payment and $900 of the final invoice in current year. So that's how the logic works. Maintain number range for document for line item settlement. When you settle the AUCs to assets, you have to give the number range. Number range for controlling documents, CO area. Change number range for settlement documents. Assignment of controlling area to company code. Let's check once. Where is my company code? Okay, so mine is assigned to US01. US01, do we have number range? Okay, yes, we do have. So here we maintain the settlement transaction number range. And then we have again validation. If we want to put some validations here, we can write that in settlement transactions. This you will find everywhere. Validation is in every transaction. SAP and asset accounting, SAP gives validations.
The topic we are going to talk about today is the new asset accounting. Before we get into the new asset accounting, let's understand the concept of asset class and how do we use asset class. Asset class is one of the key components of asset accounting, and its drive actually does a lot of things. It drives on all the financials within asset accounting. So let's talk about it in detail. So if you see the org structure of asset accounting, it looks like an interesting one. So we have balance sheet sits at the top where we have all assets and we have all liabilities. Then we have GL accounts, and then we have asset class. So it basically roll up from bottom to top. So under asset class we can have n number of assets. But in every company the asset class are limited. It depends based on the size and based on the nature of business they do. They can have those asset class. For example, they have land and building, they have motor vehicles, they have furniture, fixtures, computers and accessories. Depends on the nature of the business. If it's a real estate business, they will have more assets, more asset class. If they are oil business, they will have more yards and ships. So it all depends on the nature of the business, but those numbers are limited actually. And any asset in the company has to be a part of any one of the asset class, and it can only be from one asset class. You cannot have one asset belonging to two class. It cannot never happen, because the cost of the asset whenever you purchase if you see at the bottom part asset master record, there you put the cost. It rolls up to asset class at the totals, and then from asset class it determines the GL account. So if you have 1,000 assets under one category, let's say motor vehicles, you have 1,000 vehicles in the organization, all will follow under one GL account. So if you run the report for that GL account, you will see the total cost of the vehicles you have. It cannot happen that you can put 50 vehicles in this GL and 50 under this GL. If you want to do that, you need to have two asset class. You can classify as commercial vehicles and private vehicles. But if you want to if the moment they are under one asset class, all will follow the same GL account structure for depreciation, for accumulated depreciation, and for cost. So the first important criteria is the asset class determine the GL accounts, which is important from financial accounting perspective. So the asset class is the main criteria for classifying asset. Each asset is assigned to only one asset class. As I just talked about, it is one of the main criteria to classify the asset. Whether it is a vehicle, whether it is a furniture, whether it is a fixture, building, land, machinery, what is that asset? Assets that are to appear in different places in balance sheet, for example, building machine have to be assigned to different asset class. Exactly what I just said about vehicles. If you want to show your private vehicles and commercial vehicles separately in the GL, then based on that, you need to create separate asset class. So asset accounting is closely linked with GL. You cannot say that in GL I want to report in two different areas, but in asset accounting I want to show in one asset class. It cannot work. So these things cannot work in silos. You need to have a close integration, a well-defined integration to get those things aligned. There is also at least one special asset class for AUC and low value assets. So we will talk about low value assets and asset under construction in a couple of slides. So these are the examples of asset class. We are building, machinery, furniture, AUC, low value assets. Important structure for fixed asset according to the requirement consists of two main sections: master data and valuation. Master data controls the default values, administrative data, and the asset master record. For example, you have what is the mandatory field for the asset. For example, license plate number can be mandatory item for vehicles, but it is not required for machinery. Model number and serial number very important for IT equipment, not important for vehicles. So it depends what master data you want to default or you want to make it mandatory for what kind of assets. So you can do that by asset class. You can make one field mandatory for one asset class, but you can make the same field optional, or you can hide that field for other asset class. The valuation section which control parameter and default for valuation and depreciation terms. So for each asset you normally have depreciation start date, we have depreciation key, we have useful life. So based on asset class you can default those values. So if you have 10 vehicles, the default values for all 10 vehicles will be same. You can change it of course anytime, but by default initially the system will pick those values. You cannot have different default for different asset which fall in the same asset class. So those has to be linked to the asset class. Asset class definition apply to all company code in the client. So normally all those companies where asset accounting is active, you normally could define the asset class across so that you have a consistency. But SAP gives the option where you can limit the asset class to certain company code if it is very unique asset class for any country. For example, prepaids are capitalized in Japan. So for Japan you can have a special asset class prepaid, but that's not required for other countries. It all depends on the legal requirements. Other things depends on asset class is the account assignment we just talked about, the GL accounts. Number range. So number range is very important. So we have two types of number range for asset master data in SAP. One is internal and one other is external. Internal is system SAP gives you the number range. The moment you create asset, SAP generates a number. And the moment you create the next one, SAP generates the next number. So SAP system controls the number range. But if you are using external number range, you have to use, user has to give the number, which number is the asset is. That's more cumbersome, not recommended, because otherwise it will be, no uniqueness will be there. Every user will give their own choice. It can be contradict with other asset. So it's recommended to have internal number range so that SAP can generate the sequential number range. Each company code can have its own number range, or company codes can share the number range. So this is another feature where you can define the number range by company code either, or you can have one company code and share the number range across. It depends again on the business requirements. So the companies who are mostly in the shared service environment, it is recommended to have number range across company code so that user need not to have a combination of asset number and company code. Companies having their operations limited in different countries, they can have their number range by company code so that they can determine, okay, for this asset, this is my asset. Asset number 1 exists in this country, also in another country. So it depends again on the requirement, but SAP gives option, either you have it by company code or you can have across. And this is also driven by asset class. Screen layouts, which input fields are displayed in the asset master record, whether they are required entry or optional fields, suppress display only. We just talked about this. The vehicle license plate number is mandatory for vehicle class, but optional, or you can say hidden for buildings. Screen layout specifies the maintenance level. Example, at which field can you maintain, asset class, asset number, sub number. It also has a reference indicator control which field contents of an asset. Areas can be copied when that asset is used as a reference for creating a new asset master record. So when you make a reference copy of the asset, you have an option, SAP will copy all the relevant field of that asset which are there in the master record. So that's screen layout. So there is another screen in SAP asset master record where we have depreciation terms. We have depreciation start date, we have depreciation key, we have depreciation life of the asset. So SAP supplies the standard rules, you can amend those rules, and these screen layout rules also contain the maintenance level again. Now let's talk about the special asset class, the AUC and the low value assets. AUC is something which is the asset class which is basically, in business terms we call it capital work in progress. It is an under construction asset which is not depreciable until this is complete or until it is capitalized. For example, building is getting constructed for 2 years. Until 2 years you are just investing money. It is up on your balance sheet, it is your asset, but it is not a fully capitalized asset. It is non-depreciable asset. You cannot depreciate that building until you complete it. So that's AUC. So the feature of AUC is it is as good as asset, but it does not depreciate. And also you can have negative values on AUC, but it is not recommended to have negative values on asset. Another set is that you can allow down payments, or you can say the advance payment on AUCs, but SAP does not allow advance payment to the down payment on the normal assets. Depreciation is not calculated in depreciation areas intended for the balance sheet, and it is used only for the reporting purposes. You do not depreciate, you do not play around these assets until those are complete. AUC requires special asset class and corresponding GL because they have to be shown separately in balance sheet. That's a legal requirement. Normally, depreciation key 0000 is used to ensure depreciation is not calculated in AUC in areas for the balance sheet. However, special tax depreciation and investment support are possible even on AUC. So normally we use depreciation key 00, which ensures that there is no depreciation. This is the standard depreciation key. It is also possible to post down payments or advance payments on AUC. Even after AUC has been capitalized, you can still post credit memos to it. However, you have to allow negative APC. APC is cost of the asset. To manage more extensive asset investment management, there is another module, integrates internal order and project with AUC and allow detailed monitoring. So we will talk about this area, specifically investment management and internal orders and project systems in separate session as we move on with AUC details. Now let's talk about the low value assets. Low value assets can be managed using individual management as collective management. For each type of management, a separate class has to be required. In case of collective management of LVA, the base unit of the quantity of the asset is classes to be entered. To the check of maximum amount in depreciation area of the class should be also be set. So I'll give you an example. For example, you have chairs. In office you have a lot of chairs. So you don't want to capitalize each chair individually, right? So what you do is you purchase 100 chairs, and in case of collective management, the base unit of quantity in the asset class is to be entered. So you say, okay, my base unit is 100. So now rather capitalizing those chairs individually one by one, you capitalize it all together. So asset number will be 1 and the value of all those 100 chairs will be grouped together. Check of maximum amount in areas of the asset class for LV should be set. And you have to ensure that you are not exceeding certain value. Otherwise, your reporting will not be correct because you are just capitalizing under one bucket. Individual check exactly one asset per master record, or quantity check any number of asset per master record. So any number of asset per master record, as I just gave an example, 100 chairs, one asset number. So rather creating 100 assets, you just have one asset. So these are LVOs. These are mostly used, when big companies, they don't want to have so many asset numbers, so they don't want tracking it by special small assets. They want to capitalize all these small assets together. So that's about the low value assets. At a high level, we talked about the asset class today, the features of asset class, AUC, low value assets. We'll talk about more in detail about as we move on with the new asset accounting sessions.
So we'll go to the asset class creation now. First, we will assign the number range. So here we have two options. Specify number range across company codes, or we can have number range by company codes. So SAP gives two options. So normally what happens is, if it depends on business requirement, if it's a shared service environment, then companies prefer to have number range across company codes so that they don't need to remember the company code along with the asset number. But if it is normally not a shared service environment, a normal business environment, then they prefer to have number range by company code so that every company, every accounting team in each country can work on their own assets. They know their range of assets rather than jumping here and there because of number range. Because otherwise, if it is a cross-company number range, SAP will generate an inconsistent number range across company codes. And for people sitting at one location, let's say people sitting at Germany, they say, we just need to know the assets which are Germany, so it will be like asset number 1, asset number 25, asset number 38, because other asset number will be consumed by different company codes. For shared service environment, it is better to have a unique number range across company codes.
Okay, so AA01 is assigned to AUS. Okay, that's chart of assign number range, specify number range across company codes. So AA01 will take number range from AA01. Okay, so here what we did is now we have a depreciation area structure. So in the structure we have told system that okay, area 1 will post in real time, and that's a main ledger, leading ledger, and for a local ledger the area post APC immediately and depreciation periodically, and that's we have assigned to the local accounting principle. And the target ledger group is A3. So we are done with number range. Now we will try to create some asset classes. First we will define asset class. What we'll do is we'll copy one and we will say AA0001 land and building, and then we have determination will be same. Okay, we'll create another one. We'll make a copy AA02 and then we will say plant and machinery. And we will change the account determination. We will change the screen layout. We will work on screen layouts and account determination, what it is all about as we move forward. So we have two asset classes now. Let's have one more. This is plant and machinery. Copy one more. Computer and computers. Account determination will again change. It will go to hardware and IT, and the screen layout will also change. So we have three asset classes now. Oh, we make the name inconsistent. Okay, so we have let's create one more. Computer, the one we have to delete because that's something number range is inconsistent. Okay, so this is the one we are talking about. We'll create some intangibles. And then we will delete this one. Okay, so we have four asset classes now. 1, 2. We again did a mistake. It was AA. So this one we can delete. And so now we have four asset classes. This is the final summary. This one we will work upon. We have taken four classes. So the next option is specify a chart of depreciation dependent screen layout or account assignment. So what we do here is we will go to our asset class and then we will see to which chart of depreciation these are assigned. So we have AUS, right? So we are activating all our asset class which we just created for our chart of depreciation. So this is we are done with asset class creation. As we move on, we will have integration with GL. But before that, we will go to the defaults of these asset classes what we just created. We'll talk about screen layout first. Define screen layout for asset master data. So there we have screen layout use general machines. We'll try to see what is assigned here. So this screen determines when you have an asset master data, which all field will be optional, which all field will be mandatory, and which all field which are hidden. For example, if the asset class we have just created assigned with the screen layout to in 2000, then it will look like this. Your description will be required. Your description to all these will be optional. Serial number will be optional. I can make it mandatory. Okay, the first part. Now if I go out, I have posting information. Cap date is not required at the time of creation, but so anything is not required at the time of creation. Time dependent data. This is very important. So here you have a cost center. You can have a cost center mandatory. You can say anything is other than mandatory or optional. No is it's hidden. It's not open. Shutdown indicator is optional. I'll explain you the logic of shutdown indicator. Okay. So with this, we can easily tweak the fields based on asset master data. Say we have two screen layouts, 1000 and 2000. Let's say for fields required for computers and equipment will not be required for land and buildings, right? So you can accordingly change your screen layouts. Now we will see this one. Description is required. Posting information. It's all optional because it's land. We will not need a lot of things. Cost center is required because cost center will derive the depreciation. So if you don't put the cost center mandatory, then when you post a depreciation, it will give you an error. And so screen layout, cost center is, as I said, is mandatory because it's a financial impact, the depreciation impact. Evaluation group, I'll talk about. This is something field which SAP has given. You can rename this field. So we will see, how to use this field as we move on. Okay. So this is what is known as screen layout. What does do is this is a new feature. Screen layout for asset depreciation areas. So we have screen layout 1000, and then we have what is optional and what is required. So depreciation key is always required. Useful life depends on the life and the method. So from depreciation area tab perspective, what is required and what is optional, you control from here. We will do this configuration as well.
All right, let's test your knowledge. Here's a question for you. Which of the following is not a subcomponent of SAP New Asset Accounting? Option A, Asset Accounting Classic. Option B, Asset Accounting New. Option C, Investment Management. Option D, Material Management. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, ready to level up your asset management game? Our SAP New Asset Accounting course is your ticket. Take it easy at your own pace right here on our platform. In this course, you'll dive deep into SAP New Asset Accounting. Think of it as your ultimate toolset for handling supplies, making sure they're where they need to be when they need to be there. Covering all the bases, from beginner basics to advanced techniques, this course is crafted by seasoned experts who know their stuff. Your instructors, they're top-notch, With years of experience under their belts, they're here to guide you through and answer any questions you might have. But hey, don't just take our word for it. Our students rave about how valuable this course is. Folks just like you have found it super beneficial. And the best part, it's budget friendly. Quality learning that won't break the bank. Ready to master SAP New Asset Accounting? Sign up today on our page. For more details, hop over to ZaranTech's website.
So this is the screen we are talking about, which controls basically what all options you should have on depreciation area tab. Because if you go to the depreciation area tab, there are a lot of options. What is optional, what is mandatory, what is not visible, you control from here. Like scrap value. This is something which is required for Japan. So if it is a Japanese company code, you need to make it mandatory. For China, this is required. So it depends from country to country what requirement you have. Based on that, you change your screen accordingly. So that's why this screen layouts options are given. Tab layout. So this is the general tab layout which we have for all the asset classes. However, we will make a copy, we will assign to our company code. We will say is not allowed to be changed, created, or deleted. Okay. Why can't it should allow a copy? Okay. So my layout should start from Z. That's a problem. Now if I go to my layout, I see this, I can then I can assign this tab layout to the asset class. These are my asset class, so I will go to so I'll just assign it to 2 so that we can, when we see the system, we can easily differentiate what is the difference between 2 tabs. Okay, so I change the layout now. Now let me show you the asset master data screen. How does it differentiate actually? Number rigid travel is not defined yet. Okay, so here you see we have time dependent allocation, origin, leasing, and depreciation areas. Okay, but if you see the same screen with different asset class, you will see more. Which one are you assigned? So we'll go to tab layout again and we'll see which one we assign, because we changed the tab layout. Okay, so here we have ZAP, and in ZAP what we did is so we activated 5 options. general time dependent allocation, origin and depreciation area. So we can, if I delete origin, now origin is here. If I go back, come out, come in now again. So your leasing is also coming. So there's a difference. This is the difference between two tab layouts. So I change the layout. So we'll not create any master data as of now. We will see as we move on. We'll first complete the configuration. It was just to show you the demo of screen layout. User fields. So as I mentioned, we have evaluation groups. We can rename those fields. So what we can do is property we can say property type. Okay. Then we say to TRO tax return on. Then we have 3. ZTO, we have tax only assets. Okay, so this is the one. Let me show you the screen. Okay, so this is the evaluation group. So first one I renamed to asset type. Then others will also change, and then we can build a drop down for them. We can select the relevant field, and it would be kind of table building the table. So this is a custom option which SAP has given. We can design this table accordingly. We can give the name of the header based on our requirement. So we don't have any entry as of now. Okay. And I can give the drop down here. The options I have is ZTO, tax only assets, TRO, tax return only assets. Okay, this one I did. So if I go here, both these fields are there. So this is how I can build the drop down for this. Evaluation group 1, 2, 3, 4, and then we have, these are 4 characters, and then we have 5, 6, 7, 8, which have, I think 8 characters. We will see the limit of the characters. So these are the custom field which SAP has provided. You can build the table according to your requirement. You can configure those. So rather going to any development, you can, if any custom field is required, any drop down is required, you can build this table accordingly. This can be any of your reporting field as per the requirement. So we'll come out of asset master data. We are not creating it at this point. We are just still working on the configuration. Then we have 8 character evaluation group. Then how many we have? This one we have 1. Change keywords in the evaluation groups. So you can change the name of the field actually. It was visible evaluation group. You can change it to anything you want from here. So I can put this. Now if I go and see my asset master data screen, there we go. So the name is changed here, property type. So you can customize these fields. SAP has given you option to customize these fields as per your requirement at any point of time. So these are, you don't require any ABAP help. You don't require any developer. You can go and change the data in the configuration. Okay. So moving ahead, we'll go to asset accounting new. Then we were into this integration with GL. So we integrated all acquisition document types. Then we have the next is the specify posting key for asset accounting. What does it mean? Specify posting key for asset accounting. In this activity, define posting key which we are used for automatic posting when posting to fixed assets account. Use the standard SAP keys. So this all talks about the keys. When you post to fixed asset account, what posting key we want to use. For example, for GL we use 40 for debit and 50 for credit. So similarly, that's what this SAP says. Recommended is use standard SAP posting keys. So let's see what standard SAP keys are. So we have asset posting and then we have 70 and 75. So let's not change this. Let's follow the recommendation from SAP. Change the field status variant for asset GL account. So field status variant, let me give you the background. So I'll show you what it is. So for every GL account, okay, so let's talk about this one. So there is a term called field status variant in GL account, and this is what we have. Okay, now what does it mean? It means when you post to the GL for assets, what will be the fields which will be hidden, what will be the field which will be optional, and what will be the field which are mandatory for the user. For example, to post in any asset account, asset number is mandatory. Okay, to post in asset account, we don't need material number, right? So this basically signifies what is mandatory, what is optional. So let's see what it is. There we have. Let's see the first tab, general data. So you see, assignment number is optional, text is optional, invoice reference is hidden, suppress means hidden, required means required entry. If I go ahead and see what is mandatory, so all these settlement period, material number, all these are suppress. But we cannot have asset number suppress. So let's see where is asset number. Asset number is suppressed. We cannot have asset number suppressed. So what we need to do is we need to change the assignment to asset account. There is no difference. Let's see another one. So we have asset number now optional. So it will be visible on the screen. Okay. So let's save this one with this field status. So field status basically controls the asset number. So now what this option provides is specify posting key we did. Change the field status variant for asset GL account. So let's define the variant first. Then so we have G007, we just saw that is okay for us. So our company code is assigned to the right one, field status variant 0001. And here what we do is we will check that what posting key is used for which one. Let's see 70. We just saw the 70 key, right? Debit asset, and that's correct. Okay. The next one is assign input tax indicator for non-taxable acquisition. So those acquisitions which are not taxable, so we have to assign a tax indicator which would be 0. So here we have input is 0 and output would be A0. So these are non-taxable transactions. Next one is the post depreciation to GL account. Here you determine the document type for each company code for posting depreciation. You must have defined the document number range and the document type for entry view. And the standard SAP says the document type for depreciation is AF. So now the option is either you don't want to use AF, then ignore it. If you want to use AF, then keep it as it is. Normally, AF is the one which is normally used. So let's consider that we will go with AF. So how are you posting your depreciation? Is it a monthly posting? Is it a bi-monthly, quarterly, annually? Enter in expert mode. These are all the settings. So normally depreciation is a monthly posting, for every client. So we keep it as a monthly program which SAP runs. Because this setting allows you to run the program. If you make it annually, SAP will not allow you to run it during the year. If you run it, say it semi-annually, you cannot allow, SAP will not allow you to run it during the month or monthly basis. So the way you specify here, it will control the depreciation program. If you say it monthly here, and if you forget in 1 month, SAP will give you a problem. It says, hey, you forget the last month because you have given that this setting is monthly, and now you are saying that you want to run it on every second month. This is a problem. So we have to ensure that this is the right setting as per the industry standard. Normally it is a monthly setting. Okay. Then we have additional account assignment objects. So this is what we did with integration of GL account with general ledger. Let's go to general valuation. The first is set chart of depreciation. So this allows you to set the chart of depreciation for which country you are going to work now. Then we have defined depreciation areas. Let's try to understand what does it mean. Big one. Okay. So now, if I simply go to, I'm just checking, if I simply go to FS00, and if I simply choose this account, Do I get the same option? Yes. And technically, this option means change the field status of the asset GL account. So here, what you have to do is you have to change the field status variant, because you have to make cost object as optional. It was hidden actually in the asset account, so you have to make that optional. Debit asset. Okay, so this is optional. What does SAP says? Credit asset. This is optional. We cannot suppress this, otherwise system will not allow the entry. 0001 is assigned to our company code. And what option SAP is giving here is, in FIGL setting, you control which fields are contained in the entry screen for posting transaction. So that's field status variant. Field status variant is something where you can tell system that when I'm entering into this account, any particular GL account, I should have these fields display on the screen, and these fields should be hidden from the screen, and these fields should be optional. So you can make mandatory, optional, or hidden. You can control these through field status variant. You can also specify whether these fields are required entry, or you need to make specification to this type if you plan to use statistical postings. The field status variant 0001 is entered in company code 0001, and groups are already defined. So the standard variant automatically have this functionality, that's what it says, and allows an asset posting allows additional account assignment to order and WBS. When you carry out the basic customizing in FI system in financial accounting global setting, you assign the field status. Therefore, you should not change the assignment of the field status in this group. So here we define the GL account. Here we change the field status of the asset GL account. Next is the specified default transaction type. So why do we need defaults? So there are some transactions which SAP, when you post a transaction, SAP picks up the default transaction type. These are the defaults. When you post unplanned depreciation, it's by default 640. When you do post capitalization, it's 400. When you do external asset acquisition, it's by default 100. So these are all defaults. It is recommended not to change these. If you want to change, it can be done, but it is recommended not to play with this. So whenever you post transaction, system will pick from this table and will use the transaction types. Determine transaction type for internal transactions. So what are internal transactions? You determine transaction type data system uses for posting. There are some system also use some transaction type, like when you run the depreciation, the system doesn't ask you or gives you option to put anything. System will internally take that as a transaction type. So there it is 500. So these are internal transactions. See how default asset value date is determined. This is very interesting. In this step, you define which rules the system should use in each company code when determining default asset value date when posting asset transaction. You need this step only if you have special needs in regard to the asset value date, since there are standard rules in the system that meet most of the setting the asset date. So now let's understand the asset value date. So the standard way is, there are three types of dates in asset accounting: posting date and document date. So those two dates are very common, across SAP. Posting date is something when GL will take the impact. Document date is for reference, and asset value date is something which is specifically for asset accounting. So asset value date is basically when you put an asset value date for today, or let's say you are in June and you post an asset value date for 1st January. Then system will determine the depreciation start date as 1st January, and it will calculate the depreciation start from 1st January. So asset value date is something, which determines when you want to capitalize your asset, or even for everything, when you want to retire the asset. when you want to transfer the asset. If you transfer an asset, you post from A to B a company code and you put the asset value date as 1st April. So what system will do is system will check, okay, you want to capitalize that asset in receiving entity from April, then it will reverse the depreciation in present company code for 2 months or 3 months, whatever the dates, and it will post in another company code in the same month. So that is the logic of asset value date. Variant. When asset is acquired, then it has to be cap date. Okay. When retirement happens, it has to be entered manually. When settlement of happens, posting date will be your asset value date. When you settle the order, your AUC posting date will be, your order posting date will be your asset value date. In post capitalization, first day of the fiscal year is your asset value date. So there is a primary rule, there is an alternative rule. Acquisition says cap date. An alternative rule says either earlier of either document date or posting date if different fiscal year. So these are the rules which are defined by standard SAP. We can change these rules, but not recommended to play. So these are all enhancements which are given by SAP. We can use them, as and when needed in our programs. And then the last is the message type. So you can set a message type for selected messages in the area of posting. The messages are sorted by application area. So if you want to give any message, while specific message while posting, you can try messages for asset accounting, or here message for and by user, is it a online batch processing, what message you want to give. So these are all, an additional things which can be given to the user. With this, we completed all the transactions. Now let's go to information system, sort versions for asset report. So there are sort versions in asset reports. In this processing step, you define sort version. Sort version determine the sort keys and summarization criteria for your asset report. Standard SAP settings are classification for transaction reports, book depreciation, cost, and insurance values. So let's see what the sort versions are. So sort versions are basically, you can bring in, asset master data is immense. You have a lot of fields, 30 to 40 fields in your asset master data. And most of the standard report does not supply because of the, the performance issues. The master data fields are not available, mostly, all the master data fields in the reports. So what SAP provides option is, in each report, you can bring in 5 master data field with the help of sort version. So if you see here, this sort version 0001, we have company code, business area, balance sheet item, APC asset class. Okay. Now in place of business area, assume I want to bring in asset category. Okay. I can do that. Cap date. So here we have to select what all we want to bring. Let's say we want to bring in depreciation terms. And now, then we select what all depreciation term we want to bring in. We want to bring in depreciation key. Okay. So now if I use this sort version in my report, I will get the depreciation key. So let me show you. So here I used 0001. Okay, table ANLB is not supported. Which one is ANLB? Okay, so in this report it will not support. So in different report I'll show you. So you can have these terms in your report. So these are short versions. Next is define simulation variants. In this step, you define the simulation versions for depreciation reports. You can enter simulation version when you start depreciation. When you start a standard depreciation list. Go into this. A1 is there, and then simulation rules you will see. So for area 1, this key. So based on these rules, SAP will simulate you the depreciation. Okay. So we configured the basic thing. Yeah. Now we will try to post a JV and we will see how system is working, or our company code settings correct, or still we have some issues. So that's the first target now. Give me a second. Okay. We'll go to FB50L. We'll do a test posting and we will see, are we able to post a JV or is there still some issue? $2,000. Okay. So we'll try to see what system is going to post. So we have debit other general expenses and credit cash. So it looks good. What we'll do is we will save it. Okay. So now this document, if I go to this display document, I go to GL view. There is no other ledger maintained for this company code. So what we'll do is we will go to system configuration and we will see the ledger settings for this company code. At this point, we just have one ledger in the company code. What we need to do is we're trying to see if we can have multiple. We can have actually. So okay, should be activated. Company code setting for the ledger. Okay, so here we have. Then we set the indicator for that this company will be using the parallel ledgers, and then we save it. We'll try to see a document which we posted. If in GL view we have an option of other ledger now. Okay, this document was not posted with the ledgers. So the org structure is done. We are ready with the company code. Now we will go to the asset accounting settings. We have financial accounting new, and then here we have asset accounting new. So the node is changed now. Previously it was asset accounting. Now it is asset accounting new. Go to org structure first. Our country is US, so we have to check country version is available. Country version basically activates different functionality related to that country, like tax or like local settings for that country. That is the function of country version, country activation. Then we'll copy chart of depreciation. We'll copy from the standard US chart of depreciation. That's what the standard way is. You have to copy from US chart of depreciation. So it says chart of depreciation copied. Then we can rename our chart of depreciation. We can give this name. We can say chart of depreciation Apple. So we can just rename our company. So these are the depreciation areas we have at this point. We can deactivate or delete depreciation areas. We have the choice. This one I'll delete. Okay. So it goes in display mode. I can change the names as well. So I'll change the name so that it's clear how to do that. And then we will assign the accounting principle as well. We'll say US GAAP local currency. Okay. Then we can assign the accounting principles. We can say and this is my local GAAP. Okay, so we have to assign accounting principles to all areas. Specify an area for accounting principles 01 that post APC. So at this point I'm making it 60 because we have to do the setting for this. We have to change the setting for depreciation area. So this is okay. This is saved. Then we'll go to assign chart of depreciation to company code. So we have a company code AA01, and then we assign our chart of depreciation AUS we just created, and we will make the assignment. So here we will assign ZL, and we will say this area is post to area post in real time. So now it says chart of depreciation AUS, ledger of assigned accounting principal overlap. Okay, so we have overlap. Two are posting in the real time. It should not happen. So ideally only one depreciation area should be allowed to post in the real time. We'll complete this setting. Okay. So now we'll come to production startup. And the first option is set or reset reconciliation account. So what happens is when we migrate the data for asset accounting, it is migrated in two steps. So one is we migrate the subledger, and another is migrate the general ledger. And then before migrating these two, there is a connection between GL and subledger which needs to be broken, because you cannot make entry, if in the recon accounts, subledger and GL, if the connection is made normal, they are connected, then you cannot make entry to the subledger without making entry to the GL. So this is an additional step which only asset accounting work differently. It's not a case for AP and AR. So you break the connection between subledger and GL, you load the data for subledger and GL separately, and then you build up the connection again. So this is set or reset reconciliation account. So if you set here, so all the GL accounts are set as reconciliation account. Okay. So if we want to break the connection, we say this and we save. Or if we want to build a connection, we can do this and then we can save. So before migration, we build this connection, and then after migration, we break this connection. Account approach. So set, reset, recon account for parallel valuation. So this account is necessary only when we are using parallel ledgers, or only we are using account approach. So normally we don't use account approach. You can see the option. It is the same. We don't have anything here because we don't use the account approach. We are using ledger options. Activate company code. So once we complete the migration, we set this status to 0, saying asset data transfer completed. At this point, it is still 2 because still we are still working on the configuration. Activate new asset accounting for new customers. So this is one of the critical activity. We have to understand this. Use this activity if you have not yet used asset accounting in SAP powered by HANA. Okay. You can use this activity to activate new asset accounting in SAP. You must perform activation in each client. So this is where, if you haven't used an SAP accounting that in Simple Finance, then you use this step. You must first make the relevant settings in customizing, and then you activate new asset accounting. But we have to understand the limitations as well. If you see below, if you want to use new asset accounting in SAP powered by HANA, you are not allowed to use any of the components. So Even if you use new asset accounting in HP7, you cannot use these components. You cannot use joint venture accounting. You cannot use lease accounting engine, and you cannot use classic real estate. Other prerequisites. You have activated the financial extension business function since you need depreciation calculation from new business function. So we have done this. Once we have created a chart of depreciation, you can check whether meet the requirement of new asset accounting. So we can check this. This we will come in some time. Tools. Reset company code. In this activity, you can delete test application data, master records, and transactions for a company code. This might be necessary, for example, following a test legacy data transfer. Customizing are not deleted. Caution is you cannot reload the deleted data again. Keep in mind that asset accounting data is deleted in this activity, but integrated applications are not considered. Therefore, you should not carry out this activity in conjunction with other applications. So, here what happens is when you reset the company code, system will delete your master data and transactions for that company code. But you have to understand that before you do this, you need to check that what is the impact on the parallel applications. For example, if you have your asset numbers are assigned in purchase orders, then what? Then if you delete the asset number here, it is okay. But the asset will not be deleted in purchase order. And then when purchase order will be invoiced, invoice will fail. It will say asset number does not exist. So you have to understand the impact. If it is okay to test to do this on the legacy data until and unless your systems are not impacted, your other modules are not impacted. So this is the step. Normally this is a restricted steps. Okay. This is a very restricted step. It is normally not allowed in the organizations. Reset year-end closing. In this step, you can reset the fiscal year that was last closed in asset accounting. The fiscal year is then open again for posting. You can limit the reset by company code or to specific depreciation areas within the company code. However, that fiscal year is also opened in the financial accounting. You need to ensure that you can tell system, okay, I did a mistake, I wrongly closed the fiscal year, I want to reset that fiscal year. But you have to ensure that the same fiscal year is opened in GL again. It is, otherwise it will be an inconsistency. You open subledger, but you don't open the GL. Normally, you are not allowed to reopen a fiscal year after it was closed for accounting. Therefore, you should only use this function in the test systems. In testing, it is okay. So here we can do this. Okay. Now, before we move to overview expert, we just need to see the new asset accounting activation status. So here we have activate new asset accounting. So this is active at this point. So what we need to do is when we are in the new system, when we are building the new system, that activation has to be in preparation phase. Once we complete, then we do activate. And once we activate, then we cannot go back. And this activation checks a lot of things. So there are sometimes error comes if you're wrong in depreciation area, ledger is not assigned to the company code. Anything is wrong in the system, catch out here. The next step is overview of expert assign accounts. So let's see how this stuff works. It checks whether all account determination is confirmed, is fine or not, or special reserves. There is no account assigned in special reserves. Check depreciation areas. So it will check everything about your depreciation area. So overview of expert is you review everything once again. Check real depreciation areas. So it will only check the areas which are real and post in real time. Which
which currencies, value copy rule, depreciation terms, group transfer of intercompany, sequence of depreciation calculation, capitalization version. So this is just the review of end-to-end configuration what we have done. That's why the term says overview of expert. So at expert level, you just see at a high level what you have done to before you finalize the system. Check of area configuration for activation. So here it says you activate new asset accounting in customizing. In this activity, you check explicitly whether the prerequisite of this are failed in customizing for depreciation area. So that's what it checked. So whatever you have done in customizing, is that okay, or you have some issues? That's what it is checking. Check company code. It will check everything for the company code. All assignments. So you see that all these things which we did configuration, right? We did copy chart of depreciation, we assign number range, we assign document type, we assign post-booking of net book value rule, we created settlement profile, time independent management of org units. This is the area where we discussed that if you want to have an accounting during the cost center change, or we just want to have a time interval maintenance. So it is again checking everything at a high level. Check depreciation areas. Currency. So it shows which all currencies we have maintained for each area. Rounding rules. So this is arithmetic rounding. So this is how you round off the currency. Using this indicator, you specify that rounding should take place according to the rule. 10th up to and including 4 are rounded downward. So if it is 3.49, it rounded to 3, but if it is 3.5, it rounded to 4. The values. So that is arithmetic rounding. And it is by area. Check legacy data transfer. Here you cannot change anything, it is just review. Anything you want to change, you have to go back to the main configuration wherever we did line by line, and then you can do any change. Account assignment. Transaction types. And then final one is the asset class. It will show you all defaults, all user field, every setup you did. Okay?
All right, let's test your knowledge. Here's a question for you. Which of the following depreciation methods is supported in SAP New Asset Accounting? Option A, straight line. Option B, declining balance. Option C, sum of years digits. Option D, all of the above. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck! Type the correct answer in the comment section. Hey there, ready to level up your asset management game? Our SAP New Asset Accounting course is your ticket. Take it easy at your own pace right here on our platform. In this course, you'll dive deep into SAP New Asset Accounting. Think of it as your ultimate toolset for handling supplies, making sure they're where they need to be when they need to be there. Covering all the bases, from beginner basics to advanced techniques, this course is crafted by seasoned experts who know their stuff. Your instructors, they're top-notch, With years of experience under their belts, they're here to guide you through and answer any questions you might have. But hey, don't just take our word for it. Our students rave about how valuable this course is. Folks just like you have found it super beneficial. And the best part, it's budget friendly. Quality learning that won't break the bank. Ready to master SAP New Asset Accounting? Sign up today on our page. For more details, hop over to ZaranTech's website.
So the next config is technical clearing account. So this is the new thing which is introduced in New Asset Accounting. Let's understand what is this. What is technical clearing account? For an integrated asset acquisition posting, the system divides the business transaction into operational part and valuating part. For the operational part, the vendor invoice. So there are two systems. When you purchase an asset, traditional entry was, asset account debit, whatever asset number is, and credit the vendor, right? That was a very simple entry. And in the same entry, it was a valuation part. Asset debit was valuation and credit was operational. But now with the introduction of technical clearing account, SAP has broken up the operational and valuation part separately. For operational part, the system posts a document valid for all accounting principles against the technical clearing account for integrated assets acquisition. So what operational part is the vendor invoice. System posts a document valid for all accounting principles against the technical clearing account for integrated asset acquisition. So it posts one document, it says debit technical clearing account, credit vendor with whatever value it is, and it posts one document number in all the ledger groups, in all the ledgers, leading, non-leading, whatever the case is. From technical perspective, the system generates a ledger group independent document. So it's that document number which gets generated for operational part is ledger independent. It is just one document. Okay. But now when it comes to valuation part, what happens? For valuating part, asset posting with capitalization of asset, the system generates a separate document that is valid only for the given accounting principle. Okay. So the valuating entry would be asset debit to technical clearing account. And here, the system posts an entry which is basically by ledger groups. So let me give you an example. This is an interesting topic. So we purchase assets for $4,000. Okay. Now we will say traditional posting. Traditional posting is debit, credit, asset number, vendor number. Okay. And then we say $4,000. And then we say $4,000. So this was a traditional posting. Now what happened in the new one? In new posting, we have a debit, we have a credit. It posts tech clearing account and vendor. And it says $4,000, $4,000. And this is applicable in leading ledger plus non-leading ledger. Okay. Another posting system makes is debit, credit. So the second document posts this one. So this is operational part, and this is valuation. Now this one is posted into 0L.
another same entry will get posted into non-leading ledger. Now, okay. So this is one part. We'll come back to Excel again. So let me explain you again. This was a traditional posting where you have debit asset and credit vendor. But now with the introduction of technical clearing account, the posting is split. It says operational part, this one, and vendor can be paid off, and then valuation part, it posts a ledger specific document, asset number to technical clearing account, asset number to technical clearing account, leading ledger and non-leading ledger. Now the question is why? What is the benefit of we are getting out of this? Now 2 documents. That I'll explain you. Give me a minute. In this way, coming back to the help. In this way, system ensures that technical clearing account for integrated posting has a balance of 0 for each ledger group. So if you see here, my technical clearing account is debit for all ledger groups and credit for all ledger groups. It's 0 actually by ledger group. Okay, so no problem. We are good here. So system ensures 0 balance. That's okay. The account does not appear in the balance sheet, but in the balance sheet itself, but in the notes to financial account statement, since it has 0 balance. It will never appear in your balance sheet because it's a 0 balance. Now, why to require this account? If you see here, there is another thing which comes into picture is the thresholds. Okay, country threshold. So this asset purchased in US or any other country, for US GAAP, this is for leading GAAP. Let's say my picture is US GAAP is 0L and local GAAP is NL. This is US and this is Germany. Now for US GAAP, asset is capital, but for German GAAP it's an expense. For US GAAP it's an expense. So what will happen? So here it will go to the expense account. Got it? Now it makes sense to have different valuation. So for US GAAP, the valuation happens in expense because it's a less than $5,000. But for German GAAP, it's an asset because there the threshold is not $5,000. So that's why system will post in leading GAAP, it will post to expense, but in non-leading it will post to asset. So that's why this valuation part comes into picture, and you are valuating your same asset, same transaction in a different way. For one GAAP it is an expense, for another GAAP it is an asset. However, the transaction is same. That's why this logic comes into picture for technical clearing account. We go here, we define this, we create a GL account. The property should be a technical clearing account, it should be a balance sheet account, it should be a asset reconciliation account. So if I show you this, and it should not be used in any of the account determination table. You have to ensure this in asset accounting. Technical clearing, balance sheet account, and should be a reconciliation asset account. Another option, define technical clearing account for required field controls. So here you can determine by asset class. You can differentiate technical clearing account by class if you want. For an integrated asset accounting system, divide the transaction into operational and valuation. Okay, here it is. So you can tell system that, okay, for this account determination, I need this technical clearing account, but for another, I need this technical clearing account, in case it is a business requirement. Normally, it does not impact whether for all account determination, for all asset class, you use the same technical clearing account or you use the different technical clearing account. It hardly matters because at the end, the balance gets out 0 automatically, and this is not the part of your any reports. And unnecessary, you are just maintaining multiple accounts if you are saying system that, okay, maintain it by asset class. But you can do that. SAP option is available. Kana, then we have ZZ, this one 172001. Okay. So now only for this determination it will hit GL, and I can tell another system that for another determination hit another GL. It can do that. Allow down payment transaction types in asset class. So what is down payment? Let's understand the concept first. So when you purchase a big ticket item, normally you have to pay the down payment. Vendor will say, hey, give me some advance money. I cannot give you the item of 1 million on 30-day payment terms. You have to give me some advance. So what AP team do is AP team creates a down payment request. It's you can say notional entry, and then it makes a payment against that. But how does it impact an asset is when that accounting happens. For example, there is a purchase order of $1,000 and $100 is an advance. Okay, and then what you do is system will post $100 advance on an asset because it's an asset purchase. Now when the vendor will deliver goods and give you final invoice, vendor will give you invoice for $1,000, right? And it will say, hey, adjust full invoice, because initially it was a down payment request. Vendor will say, hey, take the invoice of $1,000, pay me $900 and balance it, adjust against my down payment. So in that case, when you book the $1,000 invoice and 100 is already booked, your impact is 1,100, but actual impact should be 1,000. So in that case, what you do is you clear the down payment. When you do the down payment clearing, then that $100 is cleared out and the actual balance on the asset comes as $1,000. Now here what we do is we allow the system to have down payment on certain asset class. We should not allow the down payment normally on the normal assets. It should be normally on AUCs. Okay. So if you see here, down payment, specify asset class. So standard SAP is also given the option, just have it on AUCs. Don't have it on normal assets, because normal assets are purchased without, if you're purchasing a laptop, if you're purchasing a furniture or machinery, it should not be you are not going to pay advance. For $1,000 laptop, you are not going to pay advance to the vendor. But if it is $1 million item, then it is an advance. And for $1 million item, normally it goes under an asset under construction or projects. It does not go under direct asset. So if this is allowed, system will only allow down payment posting only on this asset class. If you create an asset, any other asset class, and you put it in the down payment request, system will reject it. System will say not allowed. Sorry. So in AP, it impacts. If somebody by mistake put the wrong asset number in down payment, system will block them. It will say, hey, there is a control. You can only put the asset created under asset class 4000 or 4001 or whatever the AUC class is. You cannot do under any other class. So that's the functionality we have here. Previous subsequent capitalization of discounts. For an asset acquisition posting integrated with IAP, you can specify by your choice of document type. If the invoice should be posted gross or net, when you use a document type for net posting, system automatically determine the cash discount. So here, every country has a different law. They say, some countries say, hey, we want to capitalize tax. Some say we don't want. And same thing is for discount. If the $1,000 invoice with $100 discount, how much you want to capitalize? 900 or 1,000? So that's what the setting here is. If you check this indicator, then cash discount cannot be capitalized subsequently on fixed assets. For an asset acquisition posting, okay, so same definition. Simple as if I check this button indicator, then cash discount cannot be capitalized. I cannot capitalize the discount. So if the $1,000 invoice, I can only capitalize 900 because it will say, hey, you cannot capitalize 100, it's a discount. But if I uncheck this, then it will allow me to capitalize $1,000. Define validation. In this step, you define validation condition for asset-related posting and allocate these rules to corresponding transaction type.
Example, it is possible to specify, for example, the certain transaction can only be posted to the asset class stored in the validation rule. Another possible use is classes specific maximum amount check for acquisition posting. So if you, during acquisition, if you want to put any validation in the condition that, okay, this should be the maximum value for the purchase. If this is more than this, then let me know. Then there is a check. Or for these transaction types, for these asset class, only this transaction type is allowed. I don't want to allow anything else. So you can write all those validation rules here in the system. During purchase, it's all about acquisition. So if you see the node, it's all about acquisition. What we are talking, it's everything is acquisition. So we are done with acquisition. Next topic we have to move is retirement. So once we're done with asset class, we are done with number range. Then we have the screen layout rule. What does it mean? Create a screen layout rule and then we assign it to different asset class. The reason is every asset has a different feature. For example, if we compare building, vehicle, and machinery, 3 items, or let's say building, machinery, building, vehicle, and laptop. Right? So building will not have any license plate number. Laptop will not have any license plate, but vehicle will have. Similarly, machinery will have, the laptop will have its tag number, right? The laptop serial number, but same thing, building will not have. Building will have its location, the street address, everything, or other dimensions or other parameters, but laptop will not have. We will have vendor for laptop, but we will not have for that. So the parameters of the asset differ. Every time we have based on class, the field we need to maintain is different. Okay? So that's why, if you see here, we have real estate, building, machinery, furniture, vehicles. For every different asset class, we have one assignment. So let's create one. We will have created one buildings. And now I will assign it to my asset class. That's how I assign my asset class. Now when I go to this, we have another tab. Specify chart of depreciation, screen layout, and account assignment. If I go here, my asset class, and I'll select this dependent data. Then I have to activate this asset class in my chart of depreciation. So this is how we activate asset class in the chart of depreciation. Now if I go to second one, it will not be visible. So I have to activate the second one. It is activated in these two. So I'll say, okay, make it active in. Then I'll go to the third one. This is active in no chart of depreciation. So I'll go and say, make it active in my chart of depreciation. And based on chart of depreciation, I can change the rule. I can change the screen layout. I can change the account determination. So that's how it works. So for example, if in US I want to use different, if one chart of depreciation is assigned to multiple company codes, and in one company code I want to use different chart of depreciation, and another I want to use different, the account determination I can do that. So this is just let me summarize what we have done. We have created a company code. We have done the basic high-level GL settings, and then we moved on to creation of the asset specific configuration. We assign chart of depreciation. We created chart of depreciation. We assigned chart of depreciation. Then we went into account determination. We created number range. We created screen layout. We created asset class. Okay, this is what we have done till now.
Moving ahead, we will have integration with GL. So the next topic is integration. How defined depreciation area is posed to GL. This is one of the key steps where you tell system that this depreciation area will post and this depreciation area will not post. For example, tax area doesn't post to GL, but the leading ledger area posts to GL. But if you want that non-leading area should also post to GL, you have to tell system here it is. And it is by chart of depreciation. This is at the chart depreciation chart level. Double click this, now it gives you all the details. So the setting here is area do not post, area post in real time, area post only depreciation, area post APC immediately and depreciation periodically. Then we have assignment to the ledger principal, real depreciation area. Then we have value maintenance perspective. What kind of values are we expecting? Are we expecting a positive? Are we expecting negative? Somewhere we have positive, somewhere we have negative. For example, acquisition cannot be negative, right? We cannot have negative acquisition on the asset. Depreciation cannot be positive. We have unplanned depreciation, only negative value as well. We cannot have unplanned any depreciation as positive. So that's how it controls the values. Ordinary depreciation also. Again, negative values only. We cannot have depreciation as positive. Revaluation, we have no revaluation normally. This is how you can change the area. So since we have only one ledger group, so it is only appearing here. So next step is assign GL accounts. So GL account is something we assign for the posting. And as I discussed, asset is assigned to the asset class, and asset class will further call the account determination and account determination will call the account. This is the screen where we do setting. We have a chart of account assigned. Then we go to account determination. And then if I see my asset class, which is not appearing, so for successful financial posting, we have to determine the cost account, the depreciation account, any accounting which happen on that asset which is assigned to this asset class will be controlled from here. All the GL accounts will be controlled. So you cannot directly have any posting on asset directly on GL account. For assets, even if it's a down payment, it's clearing, it's a loss, retirement, everything has to be done. We have other buckets. Okay, special depreciation is for tax. Unplanned depreciation, you normally post unplanned values. So we assign the balance sheet account. Okay, we go to depreciation tab. We are good. We have assigned all the GL accounts. All the depreciation AD will get posted to this. Expense will post it to this. We will see all those postings. Okay. So another important area now is the technical clearing account. So this is something very new in new asset accounting. This is a part of HP 7 and Simple Finance. So what it does, it creates a, when you acquire an asset, it creates a two accounting entries. At the first step, it debit the asset, credit this clearing account, and at the second entry, immediately it debit this account and credit the vendor. Okay. So let's try to understand the use. For an integrated asset acquisition posting, the system divides business transaction into operational part and evaluating part. For the operational part, so now there are two parts. One is operational and one is valuation. For the operational part, the vendor invoice is operational. Okay, because that is something for the normal operation. The system posts a document valid for all accounting principle. Again, the technical clearing account. From technical perspective, the system generates a ledger group independent document. But from valuation perspective, for operational perspective, system generates one document. It says debit technical clearing account and credit the vendor, so that vendor invoice can get posted. Now, from valuation perspective, what system do is asset posting with capitalization of the asset. The system generates a separate document that is valid only for the given accounting principle. The document is also posted again technical clearing account for an integrated asset acquisition. From a technical perspective, the system generates ledger specific document for each accounting principle. In this way, the system ensures that the technical clearing account has a balance of 0 for each accounting principle, because at the first step from operational part, it actually creates for all ledger groups, and then at the second level, at the valuation part, it creates by ledger group. So at the end, the technical clearing account will be 0 for all the ledgers. The account does not appear in the balance sheet itself, but in the notes on the financial statement, since it has a 0 balance. So it will not appear in the balance sheet because automatically it gets 0. It's a reconciliation account, automatic postings are made, no manual postings allowed. The requirements are, you have created the technical clearing account in chart of account. The following prerequisite must be met. Account is a balance sheet account and must be a reconciliation account. It's a non-line item managed account and is not allowed to be defined in account determination for asset accounting. It cannot be a part of any account determination table. Now the reason is, operational part is clear. Okay, we have to pay to the vendor, we book the invoice. From valuation perspective, we can have a scenario where for one ledger group, we make the asset as asset, or we make the purchase as asset, and for another ledger group, we same purchase as expense. Okay, and this is very normal. Every country have its own threshold. So for US GAAP, it's $5,000 threshold, and India it's 5,000 rupees. So if it's something you purchase for $200, for India it's a capital, but for US it's an expense. So from valuation perspective, system generates another entry where you can classify them. Okay. So what we will do is we will create one technical clearing account meeting these three prerequisites. We will create one. One 70001 is nothing. Okay, this is good. We have available account. Then we say it's a balance sheet account. We say tech clearing, technical clearing account used for our asset class. Then we go to control tab.
where we are clear that it should a recon account and non-open item manage account. It cannot be open item. Okay, so now we can go here and we can say for our company code chart of accounts, and then we have 172001. Oh, we have created in company code, we haven't created it in chart of accounts. So we have FSP1. Then it works. Okay, see the magic, and then we assign it. What is the message? Technical cleaning account not allowed in company code with chart of account Kana. This is not defined in company code A01 chart of account Kana. So it says it's 172001 is not created in company code. Okay, so now we are good. We have created account and we have assigned it. Define different technical clearing account for. So if you want to have a technical clearing account by account determination, okay. So this you define across. If you want it for different account determination, it should be different. You can have that also, but there is no requirement for such in any case, because this is something at the end it gets zero out and then you don't need it. Next we have integrated transactions alternative document type for accounting principle specific document. Again, a very new thing, a very latest thing in HP7 in new asset accounting, that you can have document type for by ledger group. You can say if you are purchasing something, then you can say that okay, for this ledger group it should be AA, but for another ledger group it should be SA. So let's try to understand what is the use first. It will give more clarity. So when you enter a business transaction for acquisition, a down payment to an asset, or any retirement, system split business transaction again into operating and valuating part. So for operating part, system posts one document and it's ledger independent. For valuating part, system generates a separate document that is valid only for that accounting principle. This means that there is a separate document for each accounting principle, right? As I said, for one it is an asset, for another it's an expense posting. From a technical perspective, the system generates a ledger group specific document for each accounting principle. That's correct. If document splitting is activated, system cannot always pass on document type of the entry view to the valuating documents. So the entry view is KR when an invoice is booked. The reason for this is that document type can be defined so that The items are designated as required, but they only exist in the operational document, not in the evaluating document. There is another reason why you might not need to use different document type. Your organization might require the evaluating documents are posted with different docs type to the operating document types. In this activity, you can specify alternative document type for accounting principle specific documents of asset accounting. So when your document splitting is activated, system cannot pass the actual document type. Let's say KR is the vendor invoice, KR document type to the evaluating document type. Okay. So then in that case, you need this functionality where you have to give another document type. So you go here, you say original document type KR, derived document type AA. So whenever there is a vendor invoice, the valuation document, this is your original document, this is your derived document. This is your operational document, this is your valuation document. And then you save it. Define separate document type by company code. So you can tell this to by company code, okay? So you can tell AA01 for KR, I need AA. So for my company code, I will say whenever there is a vendor invoice on the asset, the valuation document type should be AA and your original document type can be KR. It will be KR because it's a vendor invoice. Okay. So this is about integrated asset acquisitions. So in the last session, we talked about methods of depreciation, ordinary depreciation, special depreciation, and unplanned depreciation. Now we'll talk about the value depreciation key. Depreciation key is an important thing, which helps in calculation of depreciation. And it contains a lot of things behind the scenes like method of depreciation, percentage, any scrap value, any changeover method. It contains a lot of things. So we will get into detail of everything. So number one is the calculation methods. There are multiple methods for the depreciation. So first one is the base method. So base method is normally the one which is applied by standard SAP and it caters to most of the requirement across the globe. So these are the base methods. You can create custom, but most of them meet the requirement. So let's see what it means actually. Base method, sum of year digits. So number one tells us what type of depreciation is it. It's ordinary depreciation or special depreciation or tax depreciation. Then we have method. Which method it is. Percentage from calculation from useful life, total percentage, stated percentage. For example, here we have Japan and Korea declining method over total life. It is for Japan. And there are multiple methods. And then we have treatment at the end of depreciation. Depreciation after planned life ends. So when the life of the assets ends, whether you want to chart depreciation or not, then you say no. You can change it. Depreciation after net book value is 0. There is no sense of having net book value 0 and then we are charging depreciation. It is not recommended or not the right accounting practice. Similarly, let's see one more. What does it talk about? Same thing, different method. No automatic calculation. So these are all base methods. Most of them are applied by standard SAP. Then we go to declining method. Let's understand what it is. So in the step you define declining balance method, then you assign to depreciation key. So the maintain declining balance method and the description for each declining method specify multiplication factor for determining the depreciation percentage rate, an upper limit of the depreciation percentage rate, and a lower limit of the depreciation percentage rate. So let's get into the calculation. There we have declining balance method. Value into percentage divided by percentage. For each declining method, specify multiplication factor for determining depreciation percentage rate. How much percentage? The upper limit of the depreciation and the lower limit of the depreciation percentage. We select one and we check usage. We see most of the tax methods are using declining methods. All to mean makers, acres, 10%, then we have 5% and 2.5%. So it basically reduces by the passage of time. Then we maximum amount method. In this step, you define maximum amount method. You then assign to depreciation key. The calculation contains the maximum depreciation amount that is not allowed to be exceeded before certain calendar date. If the depreciation calculated by the system exceeds the maximum amount, then system reduces the depreciation to the maximum amount. So you tell system, okay, 10,000 is my total depreciation for this year. And then if system calculates the depreciation for more than 10,000, let's say system calculates 11,000 for 2016, then system will automatically reduce the depreciation to 10,000. You can specify how the maximum amount applies within the time period specified. It can either apply to an individual year or to an AD. Maintain the maximum amount method and the description. Also, if specify if maximum amount applies to annual depreciation or to AD. So it can also apply to the entire life of the asset. So you can tell system, okay, the entire AD of this asset should be $8,000. The moment it is 8,000, system will stop calculating. For each maximum amount, you have to specify the currency and date up to maximum amount which is it valid. So this is a very important method, very, very widely used. So try to understand this in detail. You have to specify maximum amount of depreciation, and you can define it at two levels. Number one, yearly. Number two, the total AD of the asset. If it is yearly, the system will put a cap at the year end. If it is AD, system will put the cap at the total value. Let's see how can we define that. This is an example of Thailand. Maximum base value of the car for Thailand. So the valid up to 31/12/9999, which means this is valid for the AD. Or if it is annual. So let's make one new entry. We say maximum amount AA0 and we say annual maximum amount for A0 buildings. Now I select this and then I make a new entry. So I will say valid to 31/12/2016 currency USD maximum amount. Okay, so I created a method AA0 currency USD and I said by 31/12/2016 90,000 should be the maximum. This is what my requirement is. And this is annual. You just see here. I have told system this is on an annual basis. So every time my annual, this year 2016, my annual depreciation should not cross 9,000. The moment it cross 90,000. The moment it cross 90,000, you reduce it to 90,000. If it is 95 by a system calculation, system will reduce it to 90,000 automatically. Next one is the multi-level method. In this step, you define multi-level methods. You then assign them to depreciation keys. Each level represents a validity period for the given percentage rate. Maintain a multi-level method and the description and enter the characteristics of the multi-level method. So this is specifically used for tax. They say for first 5 years I want this percentage, the next 5 years I want this percentage, or next 3 years. So that's multi-level. The percentage change as we move on. So let's see this one. Acquisition year anything. First year calculate 11%. Second year calculate 10%. Third year calculate 9%. Then reduce it to till 5 years calculate 7%. And 5 to 10 calculate 7% every year. The moment it is 10, calculate 6%. And till 14th year calculate 6% and 15th year calculate 5%. Okay? Try to read this table again. First year 11. Second year 10. Third year it is reducing. But after 5th year, it continues to have for next 5 years as 7%. And after 10 years, it continues to be, for 5 years, it continues to be 6%. And then at 15 years, it comes to 5%. Okay? So this is multi-level method. I'll open one more. Another example. So for first 7 years, every year it will reduce. Then from 7 to 15, it will be 6%. In 15th year, it would be 5%. And then in 16th year, it would be 3%. And what is this trick? Set this indicator if you want system to determine the periodic depreciation posting based on useful life. This indicator only makes sense for dep keys in which the base method uses percentage from useful life. So if you make this strict system-based, system will calculate the depreciation based on the useful life of the asset. So that's what it says. It makes sense where the base method is percentage from useful life method. So we'll not take this. There are a lot of, what is this? Validity start. When you want to start the validity of all these calculations. So 2 means from ordinary start, the dep start date. So normally, so let me give you the explanation of these 1, 2, 3, 4, and 5. So 1 is from cap date. So you capitalize the asset. So 1 means from cap date. For example, if the capitalization of the asset date is 1st April, okay, it is not always necessary that you start the depreciation in the same month. So depreciation might start from, let's say, 1st May based on your method, right? It can be 1st May. So then you have to tell system that all the logics of method, when they want to apply. They want to start from these logics want to start from cap date, from ordinary depreciation start date, or from when it is an AUC, from original acquisition of AUC, the moment first cap date AUC gets settled, or from the changeover year. Changeover is something like you change the method of the depreciation. Let's say for 5 years you use straight line, and then the 6th year you use another method. So from changeover year is something you change the method. So based on this logic, you tell system that all these methods calculation, all these years 1, 2, 3, 4, 5 we just saw, from where you want to apply. For example, this one. Let's take one example. Levels. So this year 1, when should system understand that this is year 1? So whether from the cap date, from the depreciation start date, from the first acquisition of AUC, when should system understand? So that's a validity. So the last method is, in the calculation method, is the period control method. Period control method is, in this step you maintain period control method. You then assign 2 depreciation keys. Now what is period control? Period control is you can specify the depreciation start for all acquisition in the year is set to the first day of the period. Requirements, you must have already maintained a period control. So what system knows is, when you start the depreciation of when you assign the key, you have to assign the period control. So maintain the period control method, assign period control to the for acquisition, subsequent acquisition, retirement, and so on. So period control method 1, which means this is the name 1122. So which means now what is the meaning of 1, 2, 3, and 4? That's very important. So on an acquisition, depreciation should start at period start date. Additional acquisition, same thing. When you retire an asset, pro rata up to the mid period at the period start. So if you retire on 10th of June, so system will calculate the depreciation in the same company code, in the sending company code, in the retire at till 15th of June. And same is for transfer. The next one is 3622. Pro rata at the mid period. 6 is at the start of the year. So whatever the acquisition date is, this one, 6. You acquire on 1st June or you acquire on whatever date. System will start depreciation calculation at the start of the fiscal year. Let's say fiscal year is April to March and you start acquire an asset in June. System will calculate from 1st April, no matter what is the date. 2 we already discussed. So let's try to understand all these methods. So within these methods you can apply the logics here. First one is pro rata at period start date. It means if your asset is acquired on 10th June, then system will calculate the depreciation from 1st June, but it will be on pro rata basis. Second is same, pro rata up to mid period at period start date. Third one is at mid period. It's not a period start date. 4 means first year convention at half year start date. So for first year, it will calculate from the half year date. And from next year, it will calculate from the normal method. So this one is valid for Austria. Year start date, mid-year, year end. What does it mean? Whatever the year start is, whatever the mid-year is, and whatever the year end is. It can calculate based on any 3. At the start of the year, I just talked about this. Whatever the asset acquisition is, at the start of the year, depreciation will start. At mid-year, whatever your acquisition date is, system will calculate the mid-year. For example, in April to March, the mid-year is April, May, June, July, August, September. 1st October is your mid-year. In January to December, your mid-year is 1st July. So whatever the start is, it will be mid-year. 8. At the end of the year, which is start of the following year. So you purchase on 10th June this time, your depreciation will start on 1st April. Mid-quarter. This is mostly for tax. At the first quarter, whatever you acquire, it will post based on first quarter. Next month, next quarter, next half year. Simple. 11 means start from next month. 12 means whatever, if you acquire in June, so the next quarter is April, May, June is July, 1st July. Even if you acquire in May, it will start from 1st July. Next half year. 14 is not used. 15, first year convention and retirement. So this is for Korea. Mexico, first day, same month, second day till last day next month. So all these are methods, convention being used, and these conventions are assigned here. Period control method, and you can define another period control method. For example, let's say I'm copying this one, and I can give a name 07, 06, 05, 03, 7, 6, 5, 3. But okay, so the key is same. I will say Z, A. Okay. So I created one period control indicator for myself. So that's period control. Next topic. This one we are done. default values. Propose values for depreciation area for company code. In this step, you enter default values that are valid for certain company code and depreciation areas. In this, you can configure depreciation keys so that system uses a different interest key or special treatment of the end of depreciation. So this is mostly for tax areas where we have interest calculation, capitalized interest, section 263A of US tax. There it is normally used. Default values for depreciation key in company code. So here it says company code and allow only acquisition in capitalization year. So I say AA01 and this one. And this means if system should only allow additional acquisition in the year of the depreciation start date. It can be used, if sum of year digit methods is used, or this function can be used for organizational purposes. So I can tell system, okay, don't allow any other acquisition to the asset other than the capitalization year. Next is maintain depreciation key. So this is the one which is the magic now. Okay. Okay. So here is the list of depreciation keys. So depreciation keys are at chart of account level, chart of depreciation level. And those are, if you have one chart of depreciation used in two company codes, then those will be visible in both of the company codes. It is no matter you want to use it or not. Now, how does the key works? So this key means ordinary depreciation, phase from the plant start of depreciation, base method we just saw. There were multiple methods. 14 means ordinary depreciation explicit percentage after end of life. Declining which method? So it will use declining method 0001. Period control indicator we just saw. 3622, different combinations. Okay. So the detailed view of depreciation key. Chart of depreciation, depreciation key status, and then we have all the methods. First year 25%, second year 38%, third year 37%. Valid from cap date, depreciation start date. Base value is acquisition value. So this is a very important table. This we have to understand in detail. All the logics of depreciation sits here. Take a minute and try to read the table again. Okay. So this is how we design the keys. We will see few more keys because this is the all logic of calculation. If we understand this, we are good. This is for ENP. This one looks simple. Let's talk about this one. GD10. This is the normal depreciation key. Okay, so this says building declining method 10.5 2.5. What does it mean? says change the method after 5 years. Changeover when net book value is less than straight line. Changeover after end of useful life. The moment useful life ends, system will change the method to second one. And what is the second one? The base method changes. So it changes from 14 to 17. 14 says explicit percentage and 17 says immediate depreciation after end of life. So whatever is remaining, depreciate it. Declining method, period control, multi-level method. Declining method, changeover after end of useful life. Increase in depreciation and expired useful life, and consideration is controlled by the cutoff value key. So this is how you control your entire depreciation chart, what method you want to use, when you want to change, what is the logic of change. So all these are legal. It is not something that company decides so much complexity. You can understand now how much complex it is. So this is not something, very quick to read and quick to understand. It will take some time, you have to get into this, as I move on, I'll explain you how this method works. Because this is the entire summary of this training. If you understand how keys work, then you are good. Then you see period control is also changing. What is 9 and what is 8? 9 and then it gets into 8. 1622 and then it gets into 6622. Sorry, it was 6622 and then it gets to 1622. Multi-level method changes. 46 to 44. What does it mean? It changes from 46 to 44. So 46 is normal method and then 44 is APC, any life. Whatever life is remaining, just depreciate it. That's all. Phase 1 is start of depreciation, phase 2 is changeover within planned life, and phase 3 is changeover after end of useful life. So if the useful life of the asset ends and then you still have the value, then you want to change the method, then it is phase 3.
Alright, let's test your knowledge. Here's a question for you. Which of the following is not a feature of SAP New Asset Accounting? Option A, Integrated Investment Management. Option B, Parallel Valuations for Multiple Accounting Principles. Option C, Real-Time Integration with SAP S for HANA Finance. Option D, Support for Leased Assets. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, ready to level up your asset management game? Our SAP New Asset Accounting course is your ticket. Take it easy at your own pace right here on our platform. In this course, you'll dive deep into SAP New Asset Accounting. Think of it as your ultimate toolset for handling supplies, making sure they're where they need to be when they need to be there. Covering all the bases, from beginner basics to advanced techniques, this course is crafted by seasoned experts who know their stuff. Your instructors, they're top-notch, with years of experience under their belts. They're here to guide you through and answer any questions you might have. But hey, don't just take our word for it. Our students rave about how valuable this course is. Folks just like you have found it super beneficial. And the best part, it's budget-friendly. Quality learning that won't break the bank. Ready to master SAP New Asset Accounting? Sign up today on our page. For more details, hop over to ZaranTech's website.
So we will see the next key. Let's try to understand. This one is very commonly used. Let's take one key for the straight line. We just saw declining method. Let's see how straight line looks like. Phase 1, phase 2, base method 11 and then changes to base method 17. What does it mean? 11 is percentage from useful life. So to calculate the percentage from useful life, for example, if it is straight line method, your useful life is 5 years. The system will calculate every year it will depreciate 20%, right? If it is 17, then ordinary depreciation, immediate depreciation after end of life. The moment life ends, if there is a value, complete it. Declining method should not, I think it would be straight line 0, 0, 0, 0. Period control, it changes from 7 to 8. Okay. And then we have changeover method. Change is again after the end of 5 is after end of useful life. This is the we just saw. Then we have another option, changeover percentage. So we can put percentage also for changeover. So this is what we have as a summary of this. Again, more complex table, but very important to understand to get into asset accounting. You have base method, you have multi-level method, declining method, period control. So since it is, we are working in straight line, we don't have anything in declining method. Multi-level method we do have. Here it says start with net book value and then go to so to start with acquisition value and then it calculates from every time it calculates based on net book value. Again, valid from ordinary depreciation start date. So normally most of the keys start from the depreciation start date because cap date is just an informational field. It derives, it's not, not only informational. It derives your depreciation start date, it derives your financials, but actually the calculation runs based on the cap date. Then we can activate and we can save it. I can delete the keys also, okay? It's not that I can just create it. So I can delete the key. So this is what we have in terms of depreciation key. Next we have is period control. In that table we were looking at all these values, right? We saw 1, 2, 3, 4 and every key was assigned with these combinations. So now the question is, we want to have more combinations apart from standard SAP. How to do that? So the logic is we can create the combinations. There is no hard stop. We can have the combinations of our own. Start of next mid-month. So I'm saying if it is 17, then the depreciation start from the next month, from the mid of the next one. So if I purchased in something in June, it should start from, the depreciation should start from 15 July. If I purchased in March, it should start from 15th April. That's how I add it. Now I define calendar assignment. I just given the name. Now it has to drive things behind the scenes. Let's say, what does it mean? So it says year, month, day, period. So we will tell system K4 17. Let's make a copy, that's more easy. The month as a part of, for every posting period, you must specify the last valid calendar period of the date of the period. Let's make a copy of this one. So we created 17. Year is nothing. This one is. This field contains the day as a part of. For every posting period, you must specify the last valid calendar date of the period. That 31st. And then what is this? For acquisition, this is the period after which the system will calculate depreciation. For retirement, this is the period up to which the system calculates depreciation. Depreciation is calculated from and to the period. For this calculation, the first period is always period 000. In other words, if you want to calculate depreciation from the beginning of the year, you must specify the period 000 or leave it blank. So I'll say 1. This is what period control is. Time-dependent period controls. So we have our company code. So this is normally not used. Generate period controls. Fiscal year variant K4, calendar year 2016. So all these period control have to be activated, whatever we just created. There was no help in the program. Only perform this step if you are using year-dependent fiscal year variant. When you assign fiscal year variant to company code, the system generates calendar assignment for the standard period control. So it is only required if you use year-dependent fiscal year variant. If you use year-independent, then it is not needed. Further settings. Cutoff value key. For certain type of valuation, it makes sense or is legally required that you end depreciation when certain value is reached. So, very much applicable for Japan. You can enter an absolute scrap value in the asset master record, or you can enter a percentage scrap value in the calculation key. In this step, you define the calculation key for automatically determining scrap values. For each calculation key, you can specify a percentage of depreciation base that should be used or the value. So the logic says, I did this for Japan, that after a certain point of time when the asset reached certain value, you should stop the depreciation and you maintain that that's a hard stop. Let's take an example. So start of the validity period cap date, 5 years and 5%. So for assets that are no more than 5-year-old, based on the cap date, the cutoff percentage is valid. Beware that you have to enter the validity period for the individual percentages or level of scrap value in the cumulative form. So you have to stop depreciation after a certain point of time. So that's what you have to define here. Japanese. I just gave you example. %. Chile, 10%. Austria, 15%. Germany, it's valid in 2 years. It is mostly for net worth tax purposes. Define maximum base value. You can say company code So I'm saying for my company code this, for my asset class machinery for area 1, up to this year, the maximum value is 500. So my asset value cannot go 0. The moment it is 500, system will stop the depreciation. We will see these calculations, when system will do. We will capitalize some assets and we'll try all these logics. System will stop the depreciation. Specify asset specific base value. So I don't have any asset number. So it is by asset number. I can tell system for this asset number, this is my base value. Since I don't have any asset number, I cannot do anything here. So I'll do this, once I complete the configuration, and I'll create some master data, then I will try this option.
Hey there, ready to level up your asset management game? Our SAP New Asset Accounting course is your ticket. Take it easy at your own pace right here on our platform. In this course, you'll dive deep into SAP New Asset Accounting. Think of it as your ultimate tool set for handling supplies, making sure they're where they need to be when they need to be there. Covering all the bases, from beginner basics to advanced techniques, this course is crafted by seasoned experts who know their stuff. Your instructors, they're top-notch, with years of experience under their belts. They're here to guide you through and answer any questions you might have. But hey, don't just take our word for it. Our students rave about how valuable this course is. Folks just like you have found it super beneficial. And the best part, it's budget-friendly. Quality learning that won't break the bank. Ready to master SAP New Asset Accounting? Sign up today on our page. For more details, hop over to ZaranTech's website.